All right, just give me a second. Jesus Christ, man. Got important business here. Things to take care of. Bitcoin price to analyze. Ladies and gentlemen, welcome to your very own Cryptopocalypse, the platoon pad. I'm your host, Crypto Ranger. And man, Bitcoin's on the move. And so are we. They want to know what the price will bring us in terms of gains. Are we going down or are we going up? And ladies and gentlemen, I'm here to tell you that in the tradition of all crypto channels in the world, it's going both ways. Let's enjoy the view and not worry about things too much, because a recovery is a recovery. And we had some indications that it might happen. It has something to do with CPR levels. It wouldn't be CPR without CR in it. That wouldn't be. No, it wouldn't. But you know what? It's the start of a week, and it's good to see you guys. Everyone here in the chat is my hero. You need to know that. But let's open the charts and see what things are looking like. Because after all, what kind of stream would it be without our precious charts, right? Let's get to it. Cryptopocalyptics, hello. I see you have all gathered and you're comfortable. Welcome to the office. We will analyze what Bitcoin's been up to, but first I want you to get comfortable. Get your coffee, get whatever you need, because this is going to be a lengthy one. Okay, so if you don't have the time for this, be welcome to come back and check out the recording, courtesy of YouTube. I'll make sure that all the best parts are saved for your enjoyment for later. Have you made any gains? Do the dance. Do the gains dance. Yeah, that's lame. Well, I'll see you guys back in the office. Let's go to the desk, shall we? Ladies and gentlemen, it is a pleasure to have you here. Welcome to the stream. We're not alone. Tonto is here. Tonto, say hello.
Greetings, Earthlings.
All right, good. So, how are you guys doing? I think what we need right now is some quiet time. Not too quiet, but, you know, say hi to one another as one big family, it is our duty to greet, meet, and proceed to new highs. Speaking of Bitcoin recovery right now, I have a chart for you that is quite magical and could potentially, everyone is jumping in on this new analysis hype train where price starts moving and they go 100K next target, not immediately, but everyone's jumping macro basically. No one has the tools or the capacity to analyze price behavior on the short time frames. Now, for us as traders who are day traders, no shame in the game, we got to say it how it is. Day traders like us, we rely on small incremental movements where we can look at Bitcoin's price and take a trade, make a little gain here and there. This 1% gang, you already know. The 1%ers here are amazing. And we want to be able to continue the tradition of not FOMOing in, of risking unnecessary amounts of capital where not needed. Have to be very, very careful right now with Bitcoin. And don't get our, I was gonna say, nothing to do with panties, but don't get too excited out there just because it made a little parabolic advance. In today's chart, we're going to take a look and hopefully explain and break down in terms of MarketSpy performance how this materialized and why I personally was sort of expecting it to break a certain level, but it's not visible in the chart. It's not like you can draw it. It was purely technical, and I don't know what, as usual, there's no fundamentals here. I don't know what contributed to this little rise, but it's no coincidence that prior to this little advance, we have witnessed some news stories and tweets and other garbage coming out. We have a channel dedicated to that called Noise inside of our Discord, and Noise the bot posted a lot of articles about shorts, whales taking huge positions, and whales are smart, but I would like to mention something and tease you a little bit with a little question. Well, all right, I'll riddle you for a second. Now, a whale is a creature that has to stay underwater, and every once in a while it comes out for a breath of fresh air. The reason they're called whales is because they can stay underwater for years on end, holding short or long positions. So for me personally, it's not relevant when a firm or an individual goes crazy on their positions and they participate in the macro. Whales are macro, okay? This is what most people are confusing with day trading, and why this could affect you negatively, psychologically, is if you think of whales as some creatures that participate in these day-to-day trades. In reality, they're longer term, not only because of their size and because it's hard to get a position fully filled for those whales. They do it over time, over different price levels. And so when we read or hear about those things, they don't really mean much because like I said, they swim up to the surface every once in a while to get a little gulp of fresh air, and that has to do with them adding or removing from their position, and that should not affect us. Rangers, what up?
What's going on, Dennis?
I'm glad you guys like The Office. Got a couple of Easter eggs all over the place. But what was I saying about whales? Yeah, we should not be affected by them, nor should we blame them when things go south or things go north, and we're positioned for south. So that's irrelevant. Something to keep in mind for the future is that those kind of articles and news, they contribute zero to our analysis, and it's
quite useless to take into the account positions of other people, especially the ones that are known. And so there's lots of speculation right now in terms of why has the price gone up, what caused it, and now we're going to see news getting flooded into the channel, noise channel, and they're going to talk about how whales are about to get liquidated, how bears are backing off, and it's every time we have a little tiny move. I'll show you a 5-day chart and you'll see a little hammer candle, which was preceded by 5 of those hammer candles. It doesn't really mean much, but there are specific levels that I'm looking at, and I think currently right now, until further notice, I am accumulating a short position because of this advance, and because of what I'm seeing. There may be a little intraday correction on the horizon, just because we're near this critical level on MarketSpy. And I'll show you what that is, courtesy of DSR. But for the most part, yeah, the chart is once again very clean, if a little dangerous. So we have to navigate with mindfulness around here. But I think it's due for a little recovery, but not without resistance in the way. There's something that's in the way right now. We're going to take a look, explore what that is, and also analyze of what transpired in the last few days. I'm trading this bit by bit, small positions across 3 different accounts, and it's been really good so far. Now, because I don't really see, like many analysts of the world right now, pros or otherwise, gifted natural talents and people who have learned TA, no one's really sure what exactly is going on, where this price action might take us next. So there's lots of uncertainty, and I've come to rely on MarketSpy as my go-to sort of tool when I myself do not know or have doubts about price action. It's a matter of a technical trade at that point, and so far it has been really wonderful. Bitcoin have shown us lots of fake outs, breakouts on technical patterns if you draw it manually. But with MarketSpy, as usual, there's a setup and you play it. There's a stop loss. If it works, it works. If it doesn't, it doesn't. We're usually very tight with those, and not necessarily trading every other candle. However, 2-3 candles is what my priority is. My goal is to capture 1 or 2 of them, and then kick back and not do anything and just watch it develop overnight. Yes, I have been sleeping with open positions. They're very tiny, but they accumulate little by little, and that has contributed to quite profitable trades over the last few weeks. So ladies and gentlemen, we've got Super Nintendo, we've got Genesis, we've got all kinds of cool stuff here. Let's nerd out. JC Lacour, enjoying the stream. Thank you for tuning in. Drew NYC Beast, Crypto Star, as usual. 8Bear, Miko Pat, VR Customs. What was the name with VR? Vincent Rembrandt, I think, maybe. Maros. The whole gang is here. All right, so let's see what it is that I'm talking about specifically, and we're going to go to the pit and bring the big picture, and I'll show you the chart, the way I have it split into 2 different time frames, and why those are, in my opinion, are important right now. So let's take a look. How about now? We should be back in business now. Should be okay. Okay. Nope. Technical difficulties, ladies and gentlemen. We're going to jump right back inside of our Sykes is on point. Sykes knows what's up. Okay. Right, so this should be a tiny bit better. We're gonna take a look at. Yeah, I'm gonna start over. Okay, I'm gonna start talking about the five-day chart over here and what it is that I'm seeing, and hopefully everything works as intended.
What the fuck's going on? TR. Fix your shit, man.
Fix it!
Alright, I'm working on it. Did you guys hear that? Did you hear the company? Not alone here, apparently. Okay. Alright, let's continue. So we have the 5-day chart here, and we're looking at the next resistance. I think what is going to happen is that we will have a little correction here, and then we'll advance towards this level. So yeah, back to the settings over here. We have the quick scan for the open, high, low, and close is set to 1 month on this side of the chart. This is on the left. Showing SR levels that are also set to 1 month. So we're looking at monthly and floors and ceilings here. We're also looking at the daily CPR zones that are set to 1 month, and they go back 60 days. So that's 2 months worth of data. Now this 2-month data is important because we have bounced off of this low, the red box, right? We pierce through this box. You know, when they're thin, we tend to rip right through them. When they're thick, there's a good chance we might find support. And as you can see, we have had a couple of wicks over here. Now this is a third, fourth consecutive hammer, bullish hammer here, and I don't know if the market is reacting to that, but clearly they're thinking that this might actually hold for a little bit. However, I think that we have significant resistance coming up here, and I'll tell you what the target is if we go further in this little mini parabolic advance. Now the open on the CPRs is kind of like the daily. We eventually make our way towards those levels. Sometimes we run through them, but they're magnets. We don't know if we're going to stop there or we're going to run. The point is to have a position before that happens. So as we get near, we should consider selling, and if we deviate too far away from it, we should consider buying and sort of trading in the direction of this gray line, which is marked by, can't really see it, but there's a yellow plus here. Okay, it's at 37. It's actually marked 37,253 is the potential target here. So what's happening on lower time frames is in the last platoon update, I was looking at the peak previous, let's just call the El Salvador pump. El Salvador. We love you guys. Keep up the good work. Set an example for the rest of the world. It's beautiful. But we have moved up to here, and this is where the fun started. So as you can see, let's just visually paint a picture here and check out these green boxes, a staircase down to hell. All right, so potential capitulation here, I don't know, a little squeeze, we went up, and we first hit the ceiling over here, the first green box. The next day we reached back to the CPR daily open. Now this settings here, so one chart is monthly, this one is set to weekly CPR resolution, and also the CPR resolution for daily inner zones is set to 14 periods. Now what that is telling me is that I was expecting this to pierce any one of these green boxes in order for us to flip our buys and start looking for a potential long setup, and we have done so in the previous couple of days, I believe. And this was my main sort of play. I was aiming to make a trade right here. So from the 50 moving average all the way down to the CPR box level right here, that was the play, okay? And we kind of failed to break above it on the first attempt, second attempt, and the third attempt we ran right through it. Now the same has happened here. We consolidated. However, notice how tight the box is from here to here. And we had a couple of traders on our Discord. What Manuel in particular, he pointed out that it was a very tight squeeze here, that potentially we might rock it off, and we did. And so I believe that this was a little resistance zone, and I think this is just one of those things that Bitcoin loves to do. When it peaks and it tops out, wants to correct, but there's this one more sort of I call these greed candles, and I believe that we're going to erase these gains. There's a good chance that we will erase these gains. And so for now, for the short term, I am building a short position on the daily ATR, accumulating this to go up to resistance. So here is the weekly resistance. So 1 week to go. So we could be rallying in this direction for till Friday. And this is our first real resistance. This would be also R4. Remember on MarketSpy, when we break above these, now the box is thin here, so that was expected. When we break above these boxes, we tend to reach targets in stages. So stage 1 would be R2. So R1 away from the daily open, which was right here. That's your buy area. And you take profit at the first level of resistance here, supported by 50 moving average Armageddon ribbon. We continue to move higher. Our orb is floating above price, which suggests that it is not time to correct yet. It's held pretty nicely above this price action here. And then of course we came closer to R2 target. R3 is just around the corner. I think we're going to hit it. And then there's R4, where we might have a little overextension and a potential correction back down to the high and the weekly open. So this is the weekly open, which started here on the pump. which means this pump needs to be retested, which means we go higher and then we sort of correct down to here. And I don't know if we're going to hold it or go lower, but it certainly is looking like, notice that I have two charts, and one of them is, let's get rid of all the drawings here. One of them over here, you see the cross? It kind of extends over here. So if we mark our price right around here, so this is the monthly close over here, which happens to be the weekly open. Sorry, the weekly resistance here. So the monthly close at 37,253 is how much we have yet to go. So this would be right around here. This level is not that strong. It's also a magnet, and we might actually run it to go to 38 max, but this is the range where I want to be short for a small correction that I can profit off of. That is what we're looking at. Now, if we run this level and this curves up and prints a dot over here on the 5-day chart, you can see that this is the second time since the dump that our VVS is fading and losing its vivid color on the yellow dot, which means that the volume is overall declining. The bear volume is declining and it's now taken over. The bulls have taken over here. There's also the moving average here on the volume bar. If this goes above it and peaks its head, this would be a this will close in about 7 hours, 7 hours and 50 minutes, followed by a small corrective candle, and then it has the potential to go higher, to challenge this 50 EMA one more time. So for us, that would mean that a correction is expected, but maybe not as deep. But I'm not buying it. I'm selling into it. So I would like to accumulate overnight and hopefully have the price pushed down. It'll probably come back down to this open level over here, which would be. So currently, right now, it's challenging the HC target area, which it has surpassed already. Okay, so it might actually do this as we have just discussed. I anticipate that it will attempt, followed by a tiny correction. Okay, but this is the first time since the peak of the El Salvador pump that we have actually broken above the green boxes, which tells us that we may have found some momentum going further, and after a small correction, the trend might continue. It might actually find its new home here above, and so think of it as a staircase where we have been under the green boxes, bouncing on. So bounce, consolidation, drop, bounce, consolidation, drop, bounce, consolidation, drop, bounce, consolidation, drop, bounce. Volatility was marked high here because of the squeeze, massive correction, and then a continuation. So we could be facing volatility is going to get high here. Expect a red candle that's going to erase all these gains, in my opinion, quite sharply. So we'll see what happens on the 5 candle. Now, when this opens, I'm expecting it to cross over the 0 line and print a green dot. This momentum indicator is quite strong. However, we should assume that the move has started from 29K right about here. This is the low. It's marked by this red line. So this move basically, right? The green dot has started here. Now, because it's a lagging indicator, we can assume that this is going to be correcting quite soon. And then it has the potential to resume. So maybe sideways for a little while. Peaks out at about 37, potential overshoot to 38, and then down she goes. This is also 1, 2, and maybe a third point of consolidation here before it starts bleeding out to the downside. Now, a lot of shorts have closed their positions, and usually what that means is that they were directionally correct, just a little too early, and maybe they have entered their short around here or here. They freaked out, they closed it, so this caused price to rally a little bit. And now when they see that correction, they'll try to reopen their positions. However, Bitcoin will reverse and
The story of retail trading, basically.
yes, you're correct. The devil himself knows about this. Now whales, what about these whales? Well, they're just as clueless. It's just that they can swim a little longer with positions that are not exactly right directionally, so that's okay. Like I said, don't even listen to that. Don't worry about it. Notice deviation away from the 50 ribbon over here. Come back to retest it, and usually it's this floor. So this is showing us that 34 to 35 is the potential retest zone. However, if it's bullish price action, we can assume that the correction would be somewhere around here, maybe to the top of R1, which is not that far away. But this is the trade where I would consider buying around this level if price wants to come back down to here. And check it out. We have one projected just about here. So a drop like this would be a buy for me in this area. Now that book that was posted on Discord, Trading in the Zone by Mark Douglas, I believe, has an excellent passage there where the author says that you have simply no choice but to assume that the position you're taking, the risk that you're taking, is going to perform as expected. And so you cannot base your decision to go in on a trade on fear or uncertainty or doubt. It either works or it doesn't. So the best we can do is mitigate risk by managing it. So managing our positions well, so that we don't end up with our pants down. So yeah, and like I'm aiming for a short here for an exhaustion point, and then potentially a retest down here where I will scale on a 4-hour candle ATR to average out from that position. So right now, there it is. I have my sell orders positioned for a daily ATR. That's another 3K. I don't expect all of them to get filled, but I'm comfortable going to sleep with this trade accumulating and open. I don't know if it'll happen, but it's looking like there's a potential divergence here and certainly kind of pushing the price down. So one more wave or extension here, and it will definitely create a divergence. And then we can think about buying somewhere around here. Does that make sense? This is the plan. This is the bank robbery right here. This is how we're going to do this market. So some patience here, because this is going to be boring, a snore fest, as indecision builds up and traders are thinking, can it go higher? Can it go lower? So it will first chop them all up, mince them, dice them, slice them, and then we should have something like this where we go up, divergent, resistance at the same time, makes sense, accumulation, shorted, exit, and prepare to buy at 34 to 35, just around there. If it doesn't hold, we average out back to the lows. This cap would be the max range. It overshoots. We'll have a chance to exit in profit just around here. But yeah, this is something that MarketSpy was very successful at, using our strategies to anticipate a move like this as you get closer to these caps and we run it. Now, unfortunately, it wasn't like this one little here. We had a stage of accumulation, retest, continuation. Smaller candles are usually safer. But this rocket ship here that blasted off into the stratosphere was quite aggressive, and so I would imagine not many people had the chance to trade this unless you market your way in and sort of go with the flow, see when it starts to pause, take profit, and just wait it out and wait for the next stage. So all day yesterday this was sideways. Using Armageddon, of course, when that is the case and you're the first dragon skin situation, you have your pyramids that you could trade potentially for a nice little jackrabbit setup here. So if you're an active trader, this is amazing. All of them have materialized 2-3 candle capture, decently sized. Could have made some bank over here, but now this is going to these greed candles are calling for a little correction here, in my opinion. First up and then down, that's what we're looking at. Chandra Ervin says, just finished the last of the library recommendations. Watching the video with the market maker was crazy. Thanks for the recommendation. Learned a lot. This is what we're here for. You're welcome. And I'm really happy to see that the library is, it's not a place, whether in real world or our virtual setup here, that people visit libraries. But good on you. That's good to hear. Awesome. Remember, knowledge. What was his name? The knowledge guy. Some YouTuber scammer. I don't know if he's a scammer, but there was this character I remember hearing about. Some marketing guy. But it was always like knowledge. We need some insights, some logic, some common sense, because knowledge is just information. And information is open to interpretation. Knowledge is kind of logical knowledge. It's concrete. Just there's no other way. All right, so this is what the deal is here. There's a time and a place to use Armageddon. It's not every day, every chart setup that I have it on. For this particular analysis and this anticipated move, it was much more profitable to use DSR, just targeting these areas, because if we have a rejection and it continues, goes lower than the daily open, when it comes back up to retest it, that's basically where we have a little rejection, and that means we're going lower. So this could have went down here, failed the support level, but we open pretty aggressively, but we're very tight within this block, and we have broken out of it. So expect this to continue and post another high. This is not it. Looking at volume analysis could be, but not really. So another thing that I wanted to bring to your attention was the shorts. Let's talk about something. Let's jump back into the pit. Test. Okay, so we have a setup here, and what you're looking at is basically the longs to shorts ratio here. Cumulative longs and short delta included using the BitMEXC chart. And I don't know what the deal is with the markets overall, but here's one thing I'd like to point out is that when whoever's taking these short or long position derivative traders, right, you would think that this data over here, right, looking at the delta, the difference between shorts and longs, at these crossovers over here, right, on the delta crossover, we can see how things are changing hands here, and What I find interesting is that traders overall on BitMEX have been viewed for some time as, for the lack of a better word, degenerate traders. The kind of traders that kind of, I suppose this reflects, if price goes up, I'm long. If price goes down, I'm short. But I think there's something very, very suspicious here. Now, BitMEX is a very interesting place because if we're looking at this data, we also know for a fact that they have an inside trading desk, in-house trading desk that trades, can see positions of other traders, as well as they have teams that are set up to specifically counter trade whoever's on the platform. Now, as far as I know, through numerous interviews and research, as well as email correspondence with Bybit, they do not have, allegedly claiming that they don't, I don't know if it's true or not, but they don't have an internal desk that trades on the behalf of the company, Bybit Limited. There you go, Ty Lopez, that was the name. Alex in the house. Howdy, partner. It's great to have you guys here. Middle of the week, was not expecting too many people to be present in the chat, but you know, this is where it's happening. I'm trapped inside of this TV box. You're trapped inside of your monitor. Traders paradise. Welcome. So here we go. These short positions here are very interesting because while you're looking at shorts, when price starts to fall and when traders go short, right, it looks like there's lots of uncertainty and they're entering these positions. You can see minus 3 million, minus 4 million in terms of like what the stake is here. So the highs and the lows and the close, open some basic data here, but at which point did they enter these shorts and they closed it and flipped them. And so as price goes up, they go long. As price goes down, but the majority of these moves here, when we have a really good, so for example, this little short accumulation here, people went and sort of shorted the mid-range bottom, and they were a little late. They were not here at the peak. This is in the last 4 days, 96 hours. Okay, that's the data here. And they were kind of late a little bit. Then price went up. They started to close their positions. There was a little bit of conflict on the delta here. Debating price started to go up a little bit, and the majority here went long. And you can see these are very sort of, they're not comparable to what we're seeing here. Leading to this pump. And now what's interesting here is that when they go short here, again, they're late. They're starting to enter right here when the candle is aggressive. Most volume is located at these 2, 3, 4 candles right here. And then price corrects and goes up while the majority are short. It peaks out. They close their shorts right over here because they think, you know, it'll correct a higher low and it'll continue, which does happen. But what's interesting is that these are tiny little moves, okay? Nice little accumulation, bottoming out, and, you know, higher low, higher low, higher low. Here we go. Right over here, they start going short again, late. But here, what's interesting is that when just before the pump, this is like this cloud over here, right? One second, I'm gonna keep an eye on the chat, and it's all screwed up somehow. I don't know. Let's see. Okay. All right, I'm up to date now. So right over here, right, on BitMEX, before this, like it's interesting how they all flip long before the biggest pump out of all these candles right here. It's almost like a number of people or maybe certain entities out there, they knew that we were going to deviate and pump away from this consolidation range here, which is interesting. And they flipped long before this posted the first reversal. So it was still dumping over here, and they were already building up a long position. This first initial spike had occurred right over here at the lows of 32K. Obviously, that's way before the pump. And so this rocket jump that you saw was not only anticipated, but I'd like to have a conversation about this and ask you guys if the markets are not rigged. Well, I don't think they are, but it's too much of a coincidence that the important price action, when it has to happen, it happens, and you see all these traders. You're telling me like this is a bunch of smart traders that have anticipated this and all went long at the same time and flipped short, closed their shorts and went long? I don't know. To me, these small markings, non-activity, represent retail trading, and these bigger clouds, they're just too good for the majority to be a part of. What do you guys think? It's too good. And now, this volume over here, this is what attracted people who saw this. So anyone in this range right now is pushing, and this is why I think we're going to see a corrective move down, because this cloud is growing exponentially, and everyone is flipping long, but after the fact, not prior at the lows here, not during this accumulation, not. This is where the CPR was, where we pumped away from below the cap of the CPR, retested it, and ripped right through it. And then this is the today's squeeze where we find ourselves now, currently. So just wanted to bring this to your attention and wanted you to think a little bit about how the markets are structured and why we should not believe what we see using these funny indications. On-chain data is becoming very popular. It's almost like people have given up trading traditional indicators and whatnot. And so there are exclusive groups out there that are focused exclusively on-chain, and it's so convoluted that very few know about what that is and how to read it, because it could just be anything, right? But they have built companies on this esoteric knowledge of on-chain data, sort of making it look like they're interpreting it, what it means. There are newsletters, and they're selling it as data packages to subscribers who want to see. That I know some of you guys use it. I'm not knocking anyone's game, but liquidation points and such. It's all it. The information you're looking at has been. It's not up to date. It's not in real time as it develops. It's not something that we can apply in real time to our charts and look at things objectionably here and say, okay, well, we can see what could happen here most likely. And so on-chain data is multidimensional, and people it's open to interpretation. I just feel like it's too big of a coincidence that we have people that are entering these, like this pump right here. They all went long over here, which is technically it was a great place to go long, no doubt about it. But if you're going to tell me that masses of retail BitMEX traders have somehow figured it out and went in on this collectively, I don't know. I don't buy it. But anyway, what does that have to do with our analysis here? Absolutely nothing. But just for the sake of our conversation, I think it's worth mentioning that there are things out there that seem like they mean something, but it's really nothing. Could be a coincidence, could be insiders, and could be the fact that the markets are indeed manipulated. So we'll see. You hear that? That's the sound of the police. No, that's the sound of MarketSpy. So this is the 5-day candle I want you to take a look at and keep this on your charts and see that the first ribbon over here at 42K. Mind you, there are stops, short stops right over here. This is a magnet. The 50 ribbon is likely to get run, but I think the first resistance is at 37. Might be a little pause there. Might be a little, so I'm expecting a little shoot up. Post a typical candle like this, right? And then on the open, we'll have a continuation here. Take out these stop losses. And then when people will look at it, somehow there's a double bottom, potentially lots of wicks, and everyone goes long, and we're happy. What about retail traders? Are we still waiting for 25, 27, 20 maybe to buy in at those levels? I certainly hope it does go, because I have sold a majority of my stake in Bitcoin, as have many institutions and others. I don't think the HODL community realizes this, but there's certainly I feel like we're going to be able to reaccumulate. Now, whether it'll happen throughout the summer, at the start of the next year when we see those levels, I don't know. But it's a game of waiting, and it's not the first time that we're playing it. So we have to expect some prolonged periods to get some results from our trades. And when people do not know what to do, they start jumping on these macro trends, macro analysis. You have Bobby Lees and all kinds of characters coming out that have predicted the top, that have predicted the bottom, and so they carry some weight with them, or so people think. And they're telling you 100K targets. Others are telling you JP Morgan's jumping in there. Bear market is here. It's coming. So it tells you that these analysts don't really know what it is that they're looking at, and price is really the king, and everyone's a slave, and we will obey and do as we're told. Or these guys have an agenda, and they're really trying to take advantage of the Wild West here. Knowing the potential of Bitcoin, knowing the potential of crypto, and they want to accumulate lower, and they'll somehow achieve that by spreading more FUD stories. But for me personally, I wish that, and not to go against positions of people that are still holding, but it would be nice if Bitcoin crashed, like really crashed, where we would have like dead silence. It already feels like, you know, that people are like, there's one thing that I don't like about bull markets is that everyone's way too excited, everyone's present. Don't let experiences of the past affect your future performance. You know, move on. Doesn't matter what happens. This is not new. You know, it's not shocking. There's nothing. It does not affect your analysis at all. It shouldn't. So if things have happened and you have gained, you have lost, you have balanced out, you've broke even, maybe a year went down the drain and you're back to square one where you have retrieved your initial investment. But that's the name of the game. What are you going to do? Things should not surprise us, but we should be mindful about what could potentially transpire every time we look at these new candles. Every 5 days we have a new candle, and they could tell us things, and anything goes. This is still shoulderish, and on the 5 day mark, notice that our little wrecking ball is about to cross over to the downside. Now, if this was like I always say, you know, if this is a 5-minute chart, what does that tell you? It tells me, because there's such a lag from this peak down to where the floating ball. Excuse me, floating ball is here. We cross down to here. There will be some sort of bounce, and then we'll fail right before moving. It's not going to jump across and resume the bull run. I think we're gonna have a corrective wave, which is going to be one hell of a wave, but nevertheless it is going to go sideways. And if I had to project and see where that might put a stop to price action, I see this peak and I don't see any other point to connect this to. And I know in order for traders and the markets to really shine and display their technical abilities, it cannot be as steep as this. It has to be something confusing like this. It has to be able to allow people to draw a line or something like that where it's not as clear. But all I know is that we will need to create that peak somewhere around here or here in the zone, which is just above this price tag. And so I think we can rally our way in this channel, and we'll peak out maybe 54 we're looking at, by resistance over here, previous resistance, and that would make sense to me. So this line over here is what we want to see. So why? Because we need to gift this pattern to the moon, to others, so they can continue making their funny little YouTube videos, because without this they'll be lost. And so I think Bitcoin will deliver and give them that content. It will give them this pattern to talk about, because it wouldn't be fun if it just continued falling. But it has to meet and create this peak over here somewhere. You guys see it? It has to do that. So far, we haven't really seen anything after the fall. So this quiet before the storm is potentially setting up to perform as expected. Maybe a prolonged period of silence here, but at one point or another, we will be here, and lots of people will go long. That would be the time to go short away from the peak. Many months or maybe years down the line, people will take this trend line and they'll measure it as a potential catalyst for price to go higher once we break it, but it never breaks it on the second attempt. But the second attempt should be expected. The question is, this 30K 28, this orange line, did it hold? Can we expect it now to resume and advance towards these targets? I think that's what we should be prepared for. It will get people all excited again. Bull market is back, but it won't be, in my opinion. We're still going to correct. But then again, that is something that I wish to see, because I would really like to buy lower. I don't think this is a good price point for Bitcoin to go long, and I'm certainly going to be sidelined and waiting for a long time if it comes and finds this line, wherever that may be. But I think it sits at around the 45-degree angle, somewhere around here. Now by that time, the EMA will post something like this. Price will come bump against it like this. So we'll have a correction, fear, and then and maybe we'll have a breakout. Now, just to give you an idea, from today's video until then, we're looking at 215 days. Call that a crypto winter or whatever, but I'm ready for that. Looking at this particular 5-day chart, your expectations should be long term. And while these traders that are jumping on macro trend analysis right now have no choice but to do so in order to preserve their reputation, for us, we're still working with lower time frames, 15-minute, 1 hour. MarketSpy is absolutely killing it. You guys are doing well, and it's okay to hesitate, step back, and not take a trade when the setup is there. I understand, but it should not be due to your previous trade. Previous trade is buried. It doesn't matter. It's gone. It's done with. we look forward, and just because one thing failed does not mean it'll repeat again. As a matter of fact, those are far and few in between. It's probably one or two trades that wipe you, but the majority of those trades should be profitable, at least on paper. All right, so take a little break, ladies and gentlemen. Let's take a little break. What a beautiful view, ladies and gentlemen. I'm looking at a door of my apartment. Don't believe everything you see, especially when it comes to crypto markets and the junk that people promote out there. Nah. But my home is your home. We're here, and we're happy to have you. Get some coffee. Enjoy. What? All right. Be there in a second. Now, for those of you guys who are not aware, there's a channel on Discord, and it's called, what is it called? It's called Battle Stations. Sykes, myself, Bola Senora, and a couple other cool cats from the Discord server have organized a little get-together. We haven't really done it yet, but we're going to play a game or two. It's called Battle.net Warzone. Call of Duty, basically. So if you're not part of the platoon, you should be. So we're gonna run around, promote Bitcoin to plebeian creatures trying to flex their virtual skills shooting people. But we're gonna go out there and kick their butts with our 75 hertz refresh monitors trading game. So you should join us. You should join us. It's gonna be fun. I don't know when we're going to go live, but we will probably broadcast the whole experience right here on this channel. It's going to be hilarious. So, join the ranks. Add some fire. Add some fuel to the fire if you don't got any fire. Our battle tags are right there. Make sure you check it out.
5 traders jumping on a trade, trying not to get wrecked. CR called the doctor, and the doctor said, "Looks like you can't hear shit. But I'm glad you asked, because I got it fixed. I can actually hear now." And surprisingly, it's like nothing ever happened. It's back to normal. That's what I like. Trading can be a devastating experience where you lose shit, you know, hearing, hair, your car keys, or, you know, short-term memory, I don't know. But you guys need to take care of yourselves, because I know what it's like sitting there babysitting the trades, monitoring them. It takes a lot out of you, you know. And remember, the future is in crypto, so it's worth it in the end. That right there, you see that? That's not worth it. Crypto is. And I really appreciate you guys asking these questions, because health has been on my butt cheeks for a while now. This, that, you know, throat, hearing. I think it's all connected somehow. Go back to the charts.
Tell me the truth. Do you guys trade 1 second charts? Because lately, it's been a lot of fun. I'll explain. I'll show you how. Let's do it live. Let's do it right now. Let's get reckless. Let's get reckless. Thank you, Clifton Lewis. I still have to go for that MRI to check if I'm insane in the membrane.
Insane in the membrane. You are.
No, I'm not.
Yes, you are.
But yeah, for the most part, the sounds that you're hearing right now, they're just as stereo for me as they are for you. And I hope you're enjoying the playlist, because it's the bomb. Nobody does it better. It's more than a stream, more than a chart, more than a gamble. It's a way of life. Sir, what about go and put $1 million position on a trade? Why don't you do that? I don't know. Just silly requests, silly questions. Not worthy of our time. We got other degens that specialize in that. I know my place. Not there. You can actually learn a lot from I was inspired. We have so many great people that do amazing things, like trade 15-second charts in our Discord server, and I was motivated by that. I was like, you know what? I never watched those tick by tick charts. Let me try it a few times, and the few times that I have tried them, I liked it. They kind of speed up the process of look at MSX and look at the two simple moving averages, one ribbon and one moving average that kind of shows you what bigger time frames might look like if this was the setup. Like, imagine this is a 15-minute chart, and prior to that pump, look at that base reclaim, look at that green thickness, that toxic oozing with greenness. Look at that. And then once it deviates far enough, and just when you, it's also important to look at volume. Like, you see that volume spike, that's as far as it goes. Then the sideways is when people start opening positions to go higher, and then bam, it dumps. So that's quite interesting, the way that works. There's a bear div right there, so it's almost just like any other chart, except the only reason I would say that it's not recommended to trade something like this is because human factor. It's when you're looking at a setup like this and you're counter trading yourself, because you're watching the price, but instead you should watch the indicator. And if the indicator is getting oversold on this tiny little time frame, you should counter trade it, not yourself. Deep inside, like this is probably the top. But we have talked about the volume analysis, right? When price is at the top and we have these volume spikes, it is likely that anything that's to follow. So what Bitcoin does, what it tends to do, this interesting thing I want to show you. So here we have it, right? It's basically this, a phase of accumulation pump. Now pay attention to this volume right here. And that would be on this candle. Okay. This is the level that it's an open level. So a lot of people go short. It runs through it, takes out all the stops from both. This is why I don't like to use stops. I think position management and tiny little stinky bids, as Sykes likes to call them, are premium. That's the product that you want to have. That's the product you want to trade. Nothing too crazy for consistency's sake. Stops here. No way you can place a stop, and no way you can survive this. So you better have a tool that shows you're above a certain level that we're going to pump. In this case, this green. We have had many boot camps and videos about what this means, and it's very consistent. Here's another one right here. It's very consistent. And so you're long, and that's it. There is no stop, because if it goes down and fails this, since it's a volatility environment, so it's super thin, right? So it could go up, you could go down, break it, and then go back up. So what you're doing is you're finding support. Logical support would be this accumulation and daily CPR over here. And instead of using a stop, drops down, you reaccumulate, average it out, but aim lower, right? And then just sit on that trade, let it cook for a few hours, maybe days. Once it comes back to your entry point, not in profit, not to your desired target where you initially thought that price would go, but it didn't, but break even, and you're out. You collect those fees, and that's it. All right, you're out of the trade. If you're using traditional stops where you have 4-hour candle with a distance of 2,000 points, it's pointless. in that case, because your chances of survival are very little. Same goes to the upside. I think like when you're shorting, you should be in the mood of flipping your chart like this, just to see like if this was dumping, right? Would this be the top? I mean the bottom. Would you buy it having price deviate? Yes, because what will happen here is that no matter what, it's gonna come back to this ribbon over here. It's gonna hit it. It's gonna probably fail below it, and then it will bounce somewhere around here, which is the top of this cap. So you're looking to maybe short in the vicinity from here down to here to the next support or resistance level, R4. Remember, a breakout like this warrants price advance to R2, R3, and then R4. So you have your 1, 2, 3, and you can start accumulating shorts between 2 and 3. That is what I'm doing right now. And then we have a little rejection, peak, it goes back down, and voila, you have yourself a nice little trade. But you're certainly not looking to get precise. Those setups are very rare when you have, unless it's a blue dot, a green dot, or one of the pyramids where you're instantly in profit. Yeah, but I'm talking about like generally looking at what you're seeing on the screen right now. This would be the place and the way to do that. With Bybit Pro, this accumulation is possible to get an average here, and you wait for a corrective wave up where you can capture a part of it, and that should be more than enough for your daily vitamins of gains. You got it, Clifton Lewis. I appreciate the fact that you appreciate it, because this is definitely going to help you. Now, most of the time, great tools, great analysis, but psychologically, we need to break our bias and go against what we see. And so, for me, this would be basically looking at a chart like this, and I'm like, okay, it's falling. How much further can it go? If this is support your art, definitely. Can it extend all the way to here? Given that we have momentum. It's also worth noting that when you have turbo mode activated, which are these pink lines on the heat line over here, right? So that means it's kind of like an irrational place for price to. Yeah, it's looking exactly what it's looking like, and you have a double peak. Price is falling. How far? We can measure that approximately. So this open is your neckline. Everything is technical here. There's nothing that we're making up. The indicator is showing you right there. Any indicator with an open, and that structure is basically showing you that we can potentially go all the way up to here, but it's never a straight line, so we're going to have a little correction. But technically, you're projecting your target to this level, which is, like I said, this little yellow right over here. Follow the mouse. The trailing step, which needs to be broken in order for us to post some sort of a bullish setup above it. That's 42K we're looking at. So how far down can it go from here, given that we have a divergence? You can see it right here. It's upside down, but technically. So we have low, higher low, higher low, another one, and then target met. Now this can also get run, and at that point things can get a little crazy. 47, and the next one is like this Fibonacci line over here, sits at about 47. But you know, we've got ways to go. It's not, this could easily come back down and then go up, at which point people will say, oh, that's a double head, shoulder and a shoulder. And yeah, then the bears are really in trouble. But there's no point of me talking about that, because until that happens, we're looking at lower time frames and trying to position ourselves directionally, avoiding landmines along the way. So yeah, you flip it like this and it starts to make more sense, because if it's upside down in a normal mode like this, you're seeing all sorts of levels of resistance, all sorts of disbelief that like no way it can go up, but you flip and you're like, yes way. What goes up must go down. And so like this, it starts to look more probable, and you're like, yeah, I can totally see this happening. But I also see that somewhere mid-range from here to here to here, this is the median. So if I accumulate here, it's bound to come back to about this level, which is the open, and that is likely to happen. But can we expect this to go to 40? Sure. Retest, take out these stops over here, over here, over here. And I don't know if it's 1 and 2 and then maybe 3 before we have another major. But for now Bitcoin is on its way and it's recovering to there are lots of shorts there, so it's exciting developments on Bitcoin price chart, I think. And most exciting is that we have finally, since this peak over here at El Salvador pump, look at these steps. It's a staircase: 1, 2, 3, 4, 5, 6, 7, 8, 9, and today we had a breakout. Now, if I'm measuring these pumps in this range, we're looking at a potential 6,000, so double the daily ATR range. Potentially, if you wanted to accumulate for a short, this is what you're looking for. And 2 days in between. So let's go to the daily chart and I'll show you that we usually have 3 consecutive candles in a row before we take a little pause. And that's a non-trending environment. So we have 1, 2, and 3. By the way, all this is happening on the death cross. A long time ago, we have discussed how a setup like this is sort of, it's not really bearish, because if the death cross happens right here, so price is consolidating tightly, and let's assume that this was the line over here. So this is a daily chart, and we have your 50 and you have your 200, and if the cross happens here, yeah, it's a death cross. But in our case, what is going to happen is that, look at it this way. Think of the lag, and this is where the drop started. This is the second low, and we're going to post another low somewhere over here, mid 40s. Okay, this would be the resistance. Just map it out in your mind or on your chart. Just analyze it and say that, okay, if that's the case, the death cross happened here. Now this death cross, the reason it happens is because moving averages trail behind price. This crossover represents price crashing from, let's say that this is 200 and this is 50. In real time, if this was a leading indicator, it would be somewhere around here, which is nice. You know, in this range, you could have traded. I'll show you a better example. What I'm saying is that this so-called death cross is lagging as hell. And so when it happens, you will see the opposite of what it stands for. Unless, let's go to 1 hour chart. Unless you see something like this, where notice So a typical bear case scenario is when we cross above the 50, tap 200, get rejected, slam back down. There's no way it can cross. Now here, for example, right? Allow me to illustrate. So this is the recovery. All right. This is 200 and the bottom is 50. Over here, this was a crossover in real time and price moved. Now the moving averages are mirroring this and they're catching up after the fact from this low to this crossover, bullish crossover. It's already too late because price has advanced from the bottom, the trough there, all the way to the peak. That's a 15% advance. If we're considering the crossover here, that's 14, just around there. And when this cross happened, it happened on this candle. Look how lagging it is. And this small consolidation, when traders look at this, less informed traders than ourselves here, they look at this and they say, oh, okay, there's a bullish crossover, we go long. However, look how tightly price is intertwined here. It goes down, rejects, and there's a crossover. This crossover happens very close to the peak. There hasn't been much advance on this. And so it's kind of what I'm trying to say, I guess, think of it as synchronization. So the drop started here, and then we have another bearish crossover here. Automatically, you're thinking to yourself, okay, peak, maybe lower high, range, bear flag. Okay, so on the basis of probabilities, you're looking for a reclaim of the 50, rejection at 200, and you position yourself to go short with a stop loss somewhere around here, maybe here, depending on your position. So the bigger the position, the tighter the stop loss, the smaller the position, the more flexibility you have. You're also looking at the L and you're saying 1, 2, you need to expect, this is what Ellioticians and Elliott waves practitioners would, I'm simplifying it for you. You don't need to draw ABC. You need to know that this is L1, L2, L3, and you're looking for a potential bottom, and you're trying to play that based on momentum, other bullish indicators. So you're combining a whole bunch of factors here in one, but this is how you look at price action in relation to the 50 and the 200 crossovers for a bearish bullish setup. Okay, we can look at another example. Here the crossover happened very close to the bottom again. This is 1 hour price chart. Peak, low, another low. So we have a flag. We have a drop, which is measured by using the base, the bottom. You already know this. Very basic TA, and this is sort of as far as we can go. So you're not looking to trade this lower than the projected distance. Usually it's very on point, so you have it right there. Now you don't necessarily have to be short here, but you can sort of do this, and then you can measure it. Okay, roughly. You don't have to be precise about this, but you can measure it roughly and say, okay, if we drop, even if I'm not short, I am already prepared to go long. Now, this measurement, what does it? Is there anything here that can potentially hold price? And if I'm entering on a ladder, how far away from the lowest measurement point? So the maximum would be double the distance, and you would have to double it. So your ladder would be scaled from the first measurement from here, logical support, any support that you can find, all the way down to the next base, weekly support. This is a weekly chart, weekly measurement of the CPR range. And you have your S1 support here at the previous low. So your ladder is right around here. And of course, the news comes out, El Salvador and everything. However, here's a crossover that sort of happened together with price at the same time. And it's happened right here in this range. So you have plenty of space from this crossover from here to here. Now, the reason this happens, this pump, is because algos calculate this in advance. They don't have to wait for the crossover to occur. They're basing their assumptions, like they position themselves in the probability that this time factored in, this would decay, and basically, if momentum is showing an advance, then this crossover is likely to happen. So they're thinking, oh, okay, by the time the crossover happens, people will see it and they will go long here. This is retail pushing it up here, greed. Lots of money to be made for the greed extension. But the original pump here is what I believe the smart algos and trading desks like BitMEXC, they get in, or El Salvador, or someone who's heard something about they're faster than us when it comes to analysis. And so these algorithms, they project that into the future, and they calculate risk from here to here. It's not that great it's not that big of a deal. It's not like you're longing here and looking to place a stop here. That doesn't work. Your R is not viable. But okay, and then we start the collapse here. Now, this is very consistent with how the moving average is moving. It just started, lower time frame, remember, and we have a crossover here, yet another flag, and it takes the price lower because that's a valid crossover. How about this one right here? Is this valid? Sort of, not really. We have two things going on here. So we have one bottom, two, and we're expecting to post, maybe this was it, another one eventually. I think we'll come back to this point, but this crossover happened, and it's a reflection of this pump and this advance from here, which means whatever you're seeing here is basically late. What's the extension here? From the base to the bottom. It's already made the distance. So anything that goes on here now, I think is an overreaction of the market, overexcitement. Hence why I'm accumulating a short, because I think this is going to end soon. Price action here shows you that it's struggling. It's going up, sideways, pushes up, breakout. Many people see it. They want it. They'll be a part of it, but we'll probably go for the open 39.40, and so I want to be able to accumulate this into a short position. Today R4 is our target based on the indicator itself. When we break above the green box, the profit taking commences on R1. So right here, breakout, retest R1, R2, profit taking 1, R3, we're gonna hit it soon, R4, we're gonna overextend there, and then we can expect a little retracement from there. So with a small tiny position, you can play this and expect it to perform as needed. Now the only problem is to go short here is that when the retest happens, you have a very strong accumulation zone here, previous peak resistance here, and a little support in both places here. So I think back to the daily open over here is as far as it goes. Okay, but this Bitcoin is going to take all these gains away. It's going to wipe them. We actually, some of you guys have been around here. You have seen this pattern before: up, down, and then up, sideways, and then eventually it recovered like this, right? It's nasty. Nobody wants to see it, but low liquidity can definitely cause this to happen, and I'm looking forward to that. Now, hopefully I'm on the right side of the trade, because the short accumulation, even though they say go with the trend is still down until proven otherwise, and this is the first staircase that we have conquered. And we're kind of struggling. We're just, it's not a pump like this, you know. So we're going to mess around here for a little bit before calming and going down potentially. Now this orb over here, we'll need to find a place where it can actually go sideways for a little while. So I'm looking at my 1, 2, and 3-ish soon, and then I want to be short here. Let's back to the 40.39. Looks about right. Our extension from the daily open to here goes a little higher, but I usually, I notice that price likes to go to the middle of the whole move before coming down a little bit, and then days later, so it'll go up, down, and then days later may catch up to this peak over here, previous El Salvador top. Now it's interesting because this drop started when they said that we're going to distribute 30K bitcoins, $30 worth of bitcoins to every citizen in El Salvador. And so that was like, oh shit, they're going to dump it all in the market, $30 each. There are a lot of people in El Salvador, so I don't know if all of them are getting it, which would be nice, but I don't know how advanced Bitcoin is, if the stage is set for them there. But it might actually be the case where people freak out and cash out as soon as possible if it hasn't happened already. I don't know if they distribute it or not, but when that happens, price will probably be somewhere around here. And then, yeah. And that's the game. That's the name of the plan. Join me if you like. Now, I don't see any technical... like I said, I might as well join all the analysts in the world and say, well, if it goes up, then it goes up. Oh, well, if it goes down, then it goes down. Because this range has been brutal, right? Ups, downs, fake outs, using traditional methods over here. Like perfect alignment of fake out number 1 over here. Bad idea, right? Fake out number 2, kind of like retested it, but went down twice. It's been really brutal. And then we have this retest, which kind of held, but then ripped right through it, consolidated. So MarketSpy is the only solution here, and that's why I have not been as active in the platoon, because I don't really know what the hell is going on. I'm waiting for lower prices to pick up some Bitcoin. And don't worry, people always say, yeah, good luck, wishful thinking, but it eventually happens, and you guys are going to be buying at 20K or lower, almost guaranteed. So nobody wants to hear it, but that's just the nature of the markets. But yeah, before giving you that opportunity, it might actually go up and force you to buy in here, but don't fall for it. I think it's not a good idea. It's better to wait. All right, let's check out the comments there. Anyone in the comments? Or is there only Clifton? So a short in between the El Salvador high. Pretty much. Now we have this thing to fall back on. So let's take this peak over here. From here to here. This is something that just got run. Now this is HC, okay? It exceeded that. Now it also shows you how perfect this level is. Now take a look. If you measure with a ruler from here to here, you will find a magical level that we're trending above. Now this level is what we're going to come back to and retest it in the next episode. Now let's mark it for the future reference, because we're going to come back to this. Let's go to the top right about here. Where is it? Right there. Boom. And we've got one here. 13 days. This was 15th. New monthly open is on its way. It's going to be lots of volatility there. But yeah, so this is the range that we're looking to, I'm looking to short. That's a 15% potential gain, where an average would be sitting somewhere around 39. If I was to cast a daily ATR at around 4,000 points to the upside, and then a little cooling off period would probably bring us closer to around this area once again, which sits at around 37 to 35 range, right around here. So this is a pretty strong resistance. I don't think it's going to get run on the first attempt, but we'll see. That's the plan anyways. Don't ask me question, what if it goes higher? I always average out and I close it at break even, as in just collect the fees and get out. And I think HC is a good time to start casting a ladder, because you only have so much until you run into the top here. This would be the third attempt to crack the ceiling. All right, from here to here, this breakout, HC is the neckline, brings us just about there. So I want to be positioned on average at around 38 to 39, and it's tighten a little short, and we'll see what to do about that later. But for now, this is what it's looking like. Now, also, what do we have on Lightning? Everything is looking healthy. Just like this little price action that kind of swivels up like this. Just goes sideways, and it's not a concrete breakout. It's just kind of like, it's going to get smashed. It's going to get smashed. It's going to be met with fierce resistance. And of course, off of that previous peak at 65, we have this thingy here that's kind of looking us in the face. So if it gets run, we have double the ATR remaining, and it would definitely go down. Maybe this will be the level to finally contend with at 20% gain over the next on the next monthly candle. Now let's take a look at a monthly candle. Okay, it's a doji. Not enough data here, but on the open, this is looking like a nice monthly doji, inverse of this candle, right? So the projection here would be $47K, which coincides with the tail of this candle here. Check it out. So I'm gonna mark that right now. That's our HC right there. That's the potential where this thing can go to. Like I said, probably not in a straight line, but it might start making its way there. Now remember, this candle, we had lots of ups and downs during this downfall, so I think you can expect the same. At the end of the day, you're going to see a little white candle here, but it's going to be on lower time frames, many opportunities to go short and long as it develops. But yeah, 1 day and 7 hours, ladies and gentlemen. We're going to have to go live and stream this thing when it happens, because that would be a candle that many traders are waiting for, seeing how we have 2 bounces already and a potential rejection, a retrace all the way up to this HC level. The orange line is what is going to happen once we surpass the 40 level. It'll go to 47 and probably top out there, and that's where we're going to find our first major resistance, maybe somewhere around this level. How soon? Yeah, because this drop, this candle, if you go to the platoon, we have talked about a potential from this peak over here. how this was going to be the half candle theory potential bounce, and so here we are. So I think we have retraced. So basically a 50% drop, half from 60 to 30, rounded off like that. And I think an allergic reaction, a sneeze in the opposite direction is what we can look forward to next month, hopefully. Yeah. What do you think is going to happen when this green dot prints over here on the weekly chart? Yeah. Yeah. It has the potential. It has the potential here. Don't think about the long-term trend flow. It started right over here, but the drop actually occurred here. So we can discount 1, 2, 3, 4 maybe candles of the downtrend. So 1, 2, 3, 4, and these are all looking bullish. So in my opinion, it might go up. But like I said, short term, I'm trading it intraday for tomorrow, where I think we might have a little breather. But once that's done and I take profit, I'm reaccumulating long again, and we'll see how that goes. It's too bad. It's too bad that it didn't go lower than this level. But I guess it's gonna take a while for us to break through, or not. We will see how that goes. I don't know. We'll see. But this is what it's looking like. This would be a perfect trap to screw both bears and bulls. Bulls will get excited above the break of the cap of the peak of 40K, go up, drive the price up to about 47, meet resistance. You'll overshoot, fail miserably, go down, go sideways, go up again, 48, then come back down. I think that is the scenario we're looking at, and we're definitely looking to touch a trend line where I just don't think that peak right there oh yeah, I don't think that peak right there is like this and this, right? These two, although this is a very significant area, I don't think this is it. But if it is, we're stopping at 46 to 48 with an overextension over here maybe. But yeah, I want to see that touchdown on the trend line, and it's going to happen. Nothing. What this trend line represents, it's a moving average of some value that we. You can put 1,000 of them, and it's going to be like one of these moving averages is going to line up with this trend line, and when it hits it, there's going to be a rejection. That trend line, this trend line, is actually every trend line is sort of a moving average. We'll do a boot camp on moving averages, and I'll show you what I mean. But trend lines are basically straight manual moving averages. There's no difference between these and what you can achieve with a 50 or a 200 moving average. But there's one that runs here and it's going to be retested. Think 50, for example, right? Let's bring DSR in here, see if that's the case. No, not yet. So it's probably some other one. Maybe you can have one on some fast moving average, basically just around there. But it's going to have to like tap it if it's going to run these levels and get a rejection. So I'm definitely short at these levels. And this is going to take a while to flip. Now remember, on lower time frames, every time we hit a 5 EMA, we get rejected. Now here, we're also getting pretty heavy resistance at 5. So we will see how the month opens and if it's able to relocate above here. I'm definitely not thinking it's going to turn blue. There's no way, but I think that it might actually push right through it and get a lot of people excited, trap a hell of a lot of people more, and then come back down. Retest the lows. I don't think we're gonna have a breakout, and because if that happens, I don't know. That'll be a first. We'll see what Bitcoin does then. But it's good to have these ideas in mind, whether they're right or wrong. In terms of probabilities, we have to consider all things that are sort of traditional, obvious. So these are the things that may or may not happen, but it looks like if I had to throw a magnet in here after a correction like this, a low, a pyramid, a jackrabbit, I think we can expect a little uptick in price potentially. That would certainly be very appropriate for it to do so. Hell yeah. Okay, let's do it, Bitcoin. X3, Jean-Claude Van Damme. Sorry, I just had to. Maybe I should sell my Bitcoin into USDT and trade with that and then buy in again. Don't do it if you haven't sold any yet. I don't know. Are you a hodler? You must be, because selling is it's a mental thing. It's like every trade, every week, whatever you accumulated your gains, out the window. Doesn't matter what price level. Sell, sell, sell. Just like taking profit on the way down and on the way up, it's relatively similar. So I think hodl is the name of the game here. If because that's what Bitcoin, it stops and it just sits there for months, and then you just can't take it anymore and you sell, and it turns out to be the bottom. So I would say the difference from the drop, 50%. If another drop to 20K happens, that's less than, you know, what are we looking at? So basically, it's not that far. It's not that far down. We're looking at 40 versus a full. Where we had here so far, 50, 55. I just think that if 30K, if this level breaks, then you know, you'll be able to sell maybe on the way down, but it'll be a very rapid, violent move. Now the other thing is, guys, is what I'm looking at is the head and shoulder thing, which is not really head and shoulderish here, because I don't know if it's going to post it or not, but we're still concerned about this pattern. But you know, my relationship with head and shoulders is just like Elliott waves. I don't believe in them. I'll trade them when they happen, and once they're done with, over with, I'll do the opposite of what had transpired. So if this head and shoulder plays out, I just use it to see my target, which sits at around 12K from here, right? If it's a head and shoulder, and this is the neckline, and you're looking to break it, it's just around there somewhere. And I'm discounting this because they usually go halfway, and there's support also. So if you have your extension all the way down, and as per the measurement, you're also thinking, okay, well, maybe there's got to be some support, and there's clearly support here. So it's not going to go all the way down there. I think the selling pressure will be absorbed before that happens. So about half of there is fine. Yep. Bobby B, we're gonna do we need to do a risk paying. I was gonna say tutorial, but it's not really a tutorial. But we're gonna take a look at that in the boot camp. If you want, you can request that in the platoon. We'll organize one if enough people. Because I don't know. It's very silent across the space. So you guys want to be teamsters? Go to the platoon and say, CR, get your butt up and ready. There's 50 of us. We want to see the boot camp on this subject or something. Because I can't I don't know what's what we haven't covered already. We'll do the boot camp and do the demos and everything privately, so you can navigate uncertainty with ease. So that's that. We have some clearly established levels here. We'll work our way towards them. Since we're at the bottom, since this is going to turn soon, look, the color is fading here, VVS. When that happened last time, you see that? 1, 2, 3, 4, 5, 6. Color faded. Right over here. I'm not saying from blue, I'm talking about yellow to dim yellow. And so we have some space. But yeah, 30K for now. Looks like it's doing its job. Although I'm not seeing a lot of volume here. This seems like too big of a candle for a capitulation. I think I would prefer to see one more candle that measures, exceeds or equals to this candle for a complete shakeout, but it hasn't happened yet. So I don't know if this was it. The lowest time frame would probably be 15. Maybe throwing a 5 in there for an entry, but depends on how aggressive I want to be with my trades. So there are times when I don't know how long the trade is going to last, and if I'm sitting at the desk, I'd go at a 5-minute time frame, see if I can pick up on a signal from MarketSpy without any major analysis. So once we analyze the price chart like this, then we can go to lower time frames and kind of expect. So if we get a signal that pops directionally, knowing that this may have been the bottom and that we're going to get a print in 5 days and 7 hours on a weekly chart. So at the end of the week, when we have a weekend, we may get a rally. And so I'll be watching the lower time frames like 5. So if we start firing off some bullish signals like blue dots, baseline reclaims, pyramids that fail to go lower and actually support price, and there's like dragon scale, basically bullish price behavior when the animal starts to behave itself aggressively, then I think I'll trade in that direction with confidence, knowing that even if the entry is a little too early to the upside, I have my weekly time frame supporting a bias here, where a couple of wicks, bullish hammer, 1, 2, doji, monthly candle open, probably up, magnet levels over here. So lower time frames will fire off a signal such as this consolidation or prior to this, and I'll just cast a ladder, pick up a few contracts, and I'll trade it, but I will not hold it to this level. I will not hold the trade to this level. I'll just simply close it $200, $500 later, depending on how fast it happens. I'll be out and then wait for a little retrace and then try to get in again. So where volume is low, you find more bearish volatility. So every exchange will have different volume measurements depending on how active the exchange is. But at the same time, like, so for example, you might be looking at a 5-minute time frame where you have volume spikes after the fact. So we had a move up. So notice how, like, this this volume spike over here, these volume spikes, the biggest candle is red, and it happens to be the bottom of the move. And that is to be expected, because when you have a top, you're waiting for a capitulation. And when something like this stands out, you know that this is probably where the majority traded, and the majority are always in the wrong. So you're trying to go counter trade this. When you have volume that's showing up at the bottom, you can expect 1, 2, 3 candles that are going to be profitable in the direction of that volume. However, this volume looks, let's mark it. This volume zone looks pretty bullish from here. But if you go and switch your time frame, so this is in the hourly time frame. If you go to 15 minutes, you will see that there are well, it's actually pretty consistent, but sometimes you'll see a red candle even though there's lots of buying pressure coming in. But yeah, so initial fat candle like this, and then you have this one last knee-jerk move in that direction, and that's usually a fake out. And then an instant reversal and volume accumulates. Now, as it spikes, volume declines, and then you have one more spike, okay? And this is usually where the top is. It marks the top, and it starts to decline because a lot of people have invested after the move. They have invested at the wrong part of the ATR value, and now they're looking to hold that position for a little while. As you can see, more volume is coming in away from the bottom. It's not the same bunch of volume here. We did a video on volume analysis, and it's pretty consistent. Now here's a volume. Look at this. This has gone up, right? Right. People have sold. Now the original accumulation happened somewhere in here, okay, away from here. So I don't know what this was, but all I know is that this sell volume right here on this candle is telling me that this exaggerated move up over here is going to have to come down, and people are going to get screwed if they're long right over here. So this breaks down because we have volume that's coming in pretty much after the fact. So after the rally, we have more and more volume that's starting to come in. So unless it's a recovery, for me, if it's still ranging, then that's a bearish sign, and we don't know until that happens. But every time something goes up, you're accumulating and going short against it. Every time something falls, you're starting to look for. So if you want to buy, you're not buying it now, you're waiting for it to come back down, and you're trying to assess and say where would the potential cap be. And I would say all these gains over here, small struggling candles, I think they're going to get wiped out by an elevator, I believe. Now listen, this is not financial advice. If you guys are holding a position out there and you're hearing this, I'm not here to scare you off. Stick with your plan, okay? It's just remember, I'm short bias here for now. So this is going to be the place where you can reaccumulate, or even lower, where you can scale. So accumulation happens here, or profit taking if you're short, and then you're scaling in to average out in this zone. And anything below that, it's a total failure. You have to break even. You have to get out of your trade. In order to do that, you cannot have a position that is sized heavily against your portfolio. So you cannot borrow more than you can afford to lose, because every leverage trade is borrowed money. Even if you're borrowing like less than your account, it's still. So here it is, and so far this tiny little rejection is playing out nicely. However, your first take profit zone is this blue zone. So it's going to bounce as soon as it goes to the open right here. It's going to bounce up like crazy. It's going to come back, and it might even go to R4. We have, how many hours do we have? Yeah, this ribbon is the target. So R4, this is going to get picked up on the monthly open. As soon as it goes down, I think it's going to get picked up and rip higher. So we should be aware of that. Daily long-term trend flow, I'm not seeing anything. Just nice little sign over here, but it's been 1, 2, 3, 4 candles later, so I don't know. Definitely buying this on a retrace. Not like this. Not where we are now. And if it doesn't give me that little retracement, well, then I'm accumulating and going for a short position until something changes. So let's see how the monthly opens in, what was it, 7 hours? 1 day and 7 hours, okay. Volume increases at the top. Not a good look. Not a good look when it increases at the top. Either a chop or a small reversal here. Let's see. 3 minutes to go. Jean-Claude, lightning bolts are history. I don't think we've had them for a while. We got the pyramids and everything, but I don't think we had lightning bolts. They're different. They're not. This is much more sophisticated now, and the algo has been rewritten with all the outlines in the bootcamp as to what is what. But yeah, I don't think we're seeing lightning bolts. That design idea is has been removed. It's gone for life, I'm afraid. Yeah. Exactly. Let price come to you. X3 says, in Bybit Pro, in what scenario would you use the limit pane in price track mode as opposed to the chaser pane? So there's no, I'm not going to get the risk pane involved here, but I'll tell you that. Let's see. So if I wanted to go for chaser, and here's a shortcut. Look at this number between the last and the market price and see how it changes. Let's just watch it, observe it for a few minutes. So we have about $20 jumps in either direction. Okay. So right here, right? About $20 or so. So the chaser would be, your distance would be set to $20 because if volatility allows for it and price jumps by $20, instead of taking profit now or using a scaled ladder, you will be able to quickly execute a trade where price kind of skips all the other traders and devours all the orders in the books, and yours just happens to be $20 away from where the current price is now. And what that allows you to do is gain an advantage and be instantly picked up $20 distance away from your entry or from where the price is now, without you actually having to guess. So this is like a volatility trade setup. But you have to understand that when price is falling, for example, sometimes I set chase, so chase 4 is set it to 5,000 or something, doesn't matter. The distance, I once set it to 150, and there was this one time where price jumped by 160, so it exceeded the distance. So it in one swift move, it just jumped by 150 points, ripped right through all the traders, and I had this chaser on and it picked me up, and so I instantly, in 1 second, I had that $150 distance from entry to take profit. and it happened very, very fast. And then when volatility is high and you just don't know what the hell's going on, because everyone's going crazy, this is when I use Chaser. In low vol environments where it's ranging, accumulating, consolidating, or otherwise, it's pretty useless, because you might as well just go to limit. It's more stable, more concrete. You can plan your trade, take your levels, you know, set it up and forget it. But Chaser is to basically get out of these positions when volatility is high, because you don't know if it jumps by $150, it can overshoot and go the other way and leave you underwater instantly. So you want to be in that trade and out of that trade as fast as you can. So for us right now, it moves by about $20 and then it stops. So that chasing profit only. Let's go and do that. Buy along. So now it's going to start tracking current price by $20. So if this drops by 21, 25, it will not be fast enough to remove that from the books. It will kind of like get stuck in there. So if price jumps by $30, but you're a $20 distance away to take profit, it's going to swallow you up. And that's a really nice trade instantly, right? For volatility. Because what happened? Why would you want to do it? Why not just place a limit and just sit there? Well, because limit, you're kind of guessing a price level. You're thinking, okay, it might go there, it might not. So if it doesn't get hit, it can spike down and then instantly reverse. And then now your limit is still in the books and it didn't get picked up. But with a chaser, it's also tracking it all the way. And it's waiting for that explosive move, for that spike to get you out of a position, right? So if you're comfortable, just look at this number over here and see how much does it move on average. And if it shows you like 5, 6, there's a difference, then that's probably how. So it's like 36, 31, 316 right now. A few seconds later, it's still the same. 36, 31, so it's still the same. So not much movement there. So Chaser is just gonna chill there and wait for that one-off movement, price movement when it actually jumps. And limit is it's limited. It just sits there, defined by you. Chaser is always chasing price. Did you see that? Did you see that we just closed this in a little profit because price jumped by more than $20? So if I wanted to take profit, I'll be missing on those $20. But because I have set it to $20, it literally just now moved rapidly by $20. Now let me go to a 1-minute chart. Let me show you what happened. It moved by $20. Look at that. Boom. I got picked up right here. Where's the close P&L? Exit value right here. Okay. Percentage 56%. Exit price 36282. 36. What? 282. Yeah, right here. So if you had your limit, let's say placed somewhere over here or on the low, right? You would not have had this. So that was not the best example, but basically you see this wick over here. This is what Chaser does. It picks you up, instantly reverses, but you're in profit, so you don't have to like, as it goes up, you start closing over here. You're like, oh my god, come back, please, I want to close. You know, it doesn't happen that way. You're instantly put in profit using Chaser. Pretty cool, man. Okay, hopefully that explains. You see how much passion goes into this, because Bybit Pro is that kind of beast. So these wicks is Chaser's the only way to get out and profit. You just have to get the distance right. Let's go full screen. 1 minute chart, check it out, and it's still, we're already taking profit here. My lat is still set to accumulate. We're almost tapped R3. Volatility will increase here. So you open a position, chase it, but then put it on chase and profit with a distance determined by the current price fluctuation. Yep, you got it, X3. That's exactly what we did. We calculate the price fluctuation, but we cannot exceed this based on... So check your ATR in 1 minute. Turn on Armageddon. So it's great when price starts falling like crazy. Like let's say it's dumping, and you kind of like, oh yeah, it's falling. I want to buy and get that instant profitable reversal. So what you would do is you would actually see that if it fluctuates by, let's say, $70, right? And as it gets closer to the bottom where it's dumped already, volatility really increases because there's a lot of demand supply at the same time. You open a chaser position and it goes this one more time, it slams back down, picks you up, instantly reverses, and then you can sell it using a limit where the price is right now. So you can click, it's almost like a market sell, but you can click limit, and you secured fees from the first pickup and from the exit as well, and that's going to contribute greatly to your overall profit on the trade. And also you made some profit because it was such a quick. So for Bitcoin is great, and Bybit Pro allows you to profit from these kind of rapid movements, rapid eye movement. But yeah, it's super amazing. I love it. But there's a time and a place to use chaser. So for example, right now, right? Check it out. It's falling. It's going to get pretty aggressive. Remember, we're on the short side and we were expecting this to go lower. So can it exceed like this level over here? Probably. What's the average ATR on this? Let's determine. If this falls lower over here, it'll produce a divergence. So let's see if we can scoop it up. So from here to here, it's about $200 to go. And on average, it moves by about here's the ATR values. We want to go to style and get rid of the take profit because we don't need that. We already know. So the ATR, previous ATR was 48, 41. So I would say $20. We kind of tested that and it picked us up on $20. So we're gonna set it to 30 for maximum. If it falls sharply, 30 is going to be a great number to chase and get picked up on. Maybe even 50, but we can average out. So in this situation, we will go with like 5K contracts for convenience. This is about 0.2% leverage, 0.2 leverage, which is averageable. It's great. But also if it reverses instantly, it will contribute to a nice little gain. A rise in like say $300, for example, and all of a sudden you have like $50 basically, 60. So okay, we're gonna go for chase for 5,000. 5,000 means it's going to chase for 5,000 points. So as long as it's falling, it's going to keep chasing it. And if it didn't get picked up after 5,000 points, there's no point. You might as well cancel it. But you just leave this for infinity. Here, just for fun, you can put like 5 million in here or something. Doesn't really matter. You can set it to the distance of the ATR. So if it does not exceed the ATR value of $40, so chase it for, let's quintuple this for so like 250 thereabouts. Chase for 250, distance 30, make it 25, and go buy. Now this is going to stay away from where the price is by a distance of 25, like a martial artist. As price advances towards it, it'll take a few steps back, maintaining that 25 point distance. If price rapidly attacks it and goes for the throat, grabs it by the nuts, like 30-point advancement versus 25 where the price is. Now price is chasing it, it's still chasing it. Then it's going to get picked up, and then at that point it is likely that because it will exceed the ATR, we'll have a reversal candle, which is going to give you $40-50 profitable entry to exit distance, and then you can instantly go to limit over here and sell it immediately, or close it with market if you prefer. But fees actually contribute to a great deal of your profit, so I would always advise using limit. Just price fluctuation in general, you have to kind of eyeball it and see. There are also tools online to show you, but they're not tick by tick to show you what the average is, and they rely on ATR. But here you can see how it actually moves in terms of volatility. Take a snapshot of this number, 64, right? Wait, let's say a few seconds, and when it finally starts to move, so right now you can see how, boom, from 64 to 76, there you go, 78, 79. So that's about $20 still. That's the average movement for these rapid sort of reactionary moves. Let's wait. Trade one tick by tick, trade one tick by tick, and you will be profitable. You know? Let's give it a shot. Goddamn pyramid reversing it. Always. So the chaser also works great around the pyramids as well. If you're able to capture one. If there's enough volatility there, so 20, maybe when the pyramid shows up, throw a 20, 30 distance away from the candle. If it snaps you up, great. Reverses and puts you in profit instantly. It's all in the training of exiting, like from here to here. That's a $50 move, which you have to assume is the most you're going to get from a signal on a 1 minute chart. Okay, at best. At worst, and for safety measures, you go for half the ATR value, fall back on a 30-second chart for that matter, and basically half it. So current ATR is 27. You should be getting in on a 1 minute chart and exiting 90% of your holdings about 15 to 17 points later. Okay, and that's fees plus your actual distance, and you don't risk holding it for these smaller. Of course, if you have multiple charts open and you know the direction that is going to likely go higher, you can hold it a little bit and exit on a signal. If there's a pyramid on one minute and a 5 minute, and it's somewhere around the dragon skin within it or above the baseline, then it's most likely to go up. If it's below, these pyramids are bearish, so any spike up, you should be looking to short with a very tight stop at the nearest peak, because these are very uniform. So anytime you go short, your stop is here. Anytime you go short, your stop is here. Anytime you go short, your stop is here. There's a higher high, lower, 1, 2, 3 reversal, 1, 2, 3, reversal. 1. We can expect this to go down 2 and 3, and maybe a reversal, but that's like the 35 level right there. And as far as I know, that is what we're looking for. We should have held that short, but you know, whatever, it was a small position. I think demonstrating it is more valuable than actually maintaining that trade. So there we have an X with a pyramid. That is most likely going to be, if we don't print a divergence here, which right now it's converging. It's great. So ignore that for now. But you are below the equilibrium zone, so I think I'm gonna go and scale. Start scaling into a short just in case, and I'm planning to leave this overnight, so I'm not sure how fast this is going to give me that trade. So that chaser is still active. It's still active. It's still looking to pick up a position in profit, and we're looking for a spike of 25 is the distance. If it drops by 25 or more, is going to get us in a position, which is what we want. Look at that. So at 36,200. So it just moved by 8. So that gives me measurement of 8 when we have these reactionary sort of movements on a 1 minute chart. Looking at the chat. How can you preset proper limit take profit if it's a chaser order like now? And the answer is right down below. Clifton Lewis says ATR is the key for chasers. So we're trying to exit at the value of 1 or half the ATR on any given move. If the chaser picks it up, we're looking to close our position within this value. Why not higher values? Why? Well, because we're trading a 1 minute chart right now. So if we're working with a 1 minute chart, then if you want bigger, better trades and calculate it differently, then we switch over to a 5, 15, 1 hour, and so on. A 4 hour chart gives us much more flexibility, but it's also a bit more dangerous because you're waiting for this candle to develop, and then you're like 4 hours later, let's see what the next candle brings, and that candle continues to go down, and you're like, okay, what the next 4 hour candle, and you still have that original position from the first 4 hour candle, for example, and that is taking some time. That's never a great feeling, because want to see the results, right? In and out. With MarketSpy is possible if that is your type. That is the kind of trader that you are, more action prone, action seeking. Whew. How's that 1 second chart looking like? It's great. All right, let it do its thing. Let's oh, look at that. We got picked up. You see that drop? So that moved by 25 and we instantly got picked up. Not a good sign. It's at the crossroads. But yeah, for your demo, you see that? What was that drop? The drop was vicious. So now it's going to go up. I wish we had like 1 minute ATR to sell into. So $50 distance. But right now, as it goes up, I don't think that this is a great level to be long on. We're gonna cast a little exit. Consider this. There it is. So that was a 25 drop. Like I said, ranging, not that great. Price starts to move. We're talking about like capitulation moves, right? When things are just looking like they're going to end. Let it stew. Gonna go get some tea. We'll be right back. My green dots! Buy the green dots! Buy the green dot! Can't you see the green dot? Buy it! Buy it!
Shut up.
Whoa. That was rude. So that right there was, let's measure this. Pretty bad entry over here. Went down, square, dot. 74 points. That is triple the ATR. So we had to get out. We had to get out. This is the kind of principle that I stick with. That when you get an entry, the price doesn't go your way immediately. Then it's best to just leave it alone and get out at break even. Collect the fees, take that 0.5 point away from entry profit, and forget about it. Next phase. So ATR is very important because if you're operating on this lower time frame, you have to rely on these numbers to give you an approximate location of your entry and exit. Combined with levels, but this is looking like yeah, the short idea was decent, although it's 500 points down. Actually, you guys are looking at the wrong screen. Okay. So ladies and gentlemen, this is one of the ways that you can mitigate risk by, got a long way to go. Got a long way to go. Now, I like the way this is. If this can stick, notice this is 1 hour, right? And equilibrium zones panning out over here, and now over here. I think the next correction is a buy for me, but these gains will get wiped out. I swear they will get wiped out. Watch Bitcoin do that. I'll come back and cast a ladder in between the equilibrium zones, starting from 2 on an hourly chart. Now the blue lines over here is the weekly CPR right here. Is it not possible that we come back to it and bounce away from it? I think it is. The original plan was to so we moved away from the peak by $500. My accumulation was above that level, so I'm gonna reinstate the 500 distance, assuming price will go up that much and continue. And that's my a little partial fill for me for tomorrow. We'll see how that goes, but yeah, we're looking to do just that. Yeah, I think for the next update, we need to get that 1 minute ATR in. I think for scalpers, it's essential. And unfortunately, we don't have it just because, you know, I don't know. We're not the lower time frame traders camp, but well, we should be. Should be looking for lower time frames for sure. USDT pairs are live. You can trade them. Thank you, Clifton Lewis. This guy's technical analysis is quite honestly the best out there. Keeps it straightforward and honest. And he's not greedy. He's the best. I don't know about... There's always, for every good boxer, there's a better one out there. Every MMA fighter. We're trying our best, doing our best. The Bitcoin is what we're up against. Price action, price movement. It's not about anyone else out there. It's about ourselves. And the best we can do is stay honest with our analysis, because in the end, it's our money on the line. So we're very careful. You have to understand that I rely on my own trades and everything for a living. So there's no incentive for me to sort of jump in and say, and I do this for fun. You see how we organize a variety of rooms here. We have the office, we have the desk, we have the pit, and now we have the platoon pad. How sick is that? It's all in the name of fun, because while we're looking at these boring ass charts day in and out, these trades is what puts my bread on my table. And I have to be careful and make sure that we look at these things objectively and not get too carried away by maybe fundamentals or biases or whatnot. But thank you, I appreciate it. Developing July CPR down there too. Yeah, speaking of developing CPRs, good reminder. Let's bring one in here. I haven't used it in a while, so weekly. Oh, snap, son. It's already bounced away. The prophecy is going to be fulfilled. If what Manuel was here, I don't know if he is, but he would tell us exactly what to do with this setup. I'm not too sure, but it's looking like we have quite a thick one over here. Yeah, I think it's going to range right through it when the time comes. Now let's go to monthly. And we just crossed over, yeah. Bounced away from the monthly. It's still on the books, and we've got about 1 day and 6 hours now, 5 hours. So USDT, you would select your instrument from the BTC USD right here, okay? And you have a whole bunch of instruments right here. Okay, and you choose your instrument, which is BTC USDT. Click on it, and it'll open it up. If you have balance in your wallet, that will show up in your wristband. And then you can do the same thing as you would with. It's quite effective as well. But be careful, it's a recent implementation, so it's still being tested. And by the way, guys, if you have any feedback, if you run into some nasty bugs or issues, report them to the Discord server so we can squash those. Transgenic, it's quite busy at the moment, but he's been doing his best to keep up with the demands of the crowds. Here at Cryptopocalypse Inc., we try to satisfy everybody. and especially when it comes to Bybit Pro, because it's a constantly evolving machine full of surprises, and never know what's next. Never know what's next. And believe me, it ain't over like Casanova, because we've got things that are just going to be so amazing once they're ready. But it takes time. It takes time to test it. Sometimes it costs trades, but we do this so you don't have to use a raw product. We test it, and yeah, I ran into a whole bunch of bugs, and there have definitely been improvements over the last few months, and USDT pairs are here, so load it up and use it. Well, you have to update the latest version 1.6.0. You need to go to the website and download it, Dale. You need to go to the website and download it. Oh yeah, the hamburger menu is right here. Oh, look at that. It's 160 right there. Latest. And if yours is not the latest, it'll give you the link. You can click on that and download. I always stay updated with the latest, and we have some beta testers as well. But yeah, man, this thing is going to, it's going to print a weekly dot. Doesn't really mean anything. There was a weekly dot print right here. And then bazam, that was the Ponzi sell-off. Remember that? But overall, yeah. By the way, speaking of trend lines, check it out. There was a nice trend line right there. It broke out and then failed. Just when you thought it rebounded. That was the coronavirus here. That's crazy. Can we expect to see something similar on Bitcoin's price chart here? Possibly. ATR is 50% of actual distance between ATR bands, right? No. So does it make sense to have a deep ladder for double the ATR value of so ATR is the percentage by which each candle, it's this, let's simplify things, it's the size of each candle in the last period. So depending on what time frame you're looking at, so for example, here's 1 hour, and the average true range of the last few candles and the expected range of whether up or down, and the distance to target on the candle close and candle open in the direction is going to be 500. So right now it dropped 500 and now it's bouncing. It's going to absorb and potentially move by another 500 points or 470 points in the opposite direction. The best way to understand ATR is to look at these diamonds over here. So for example, the relationship between the baseline and the ATR value. When the candle is close to the baseline, you have very good entries up or down. Now, how do we analyze if it's going up or down? We had a whole bunch of boot camps. This is a perfect example here, how this printed a buy signal right here with a nicely managed stop location. So that's yeah, for you guys who don't know what I'm looking at here, what I'm referring to, check out the boot camps on baseline reclaims. So here we have a diamond. When this diamond prints, it is telling you that price has moved too far away from an ideal entry point. So the closest that we can come to assuming where the entry would be for the ATR. Is like, how the hell do we know if the ATR is showing you like 700 points, like in which directions and how? So your basic assumption at all times is that if price is above baseline and it bounces away from it, and the ATR value is 700, then you have to assume that your entry has to be at or around the baseline as long as there's no yellow diamond. That means you have your proximity to the baseline is ideal, and price is likely to move in the opposite direction of the baseline. So the reason why we have a reclaim, something like this, when a full candle, not these candles, mind you, a full candle closes above the baseline, followed by another. The more it closes, the better, all right? And then we have a pump. We have to assume that price is going to retrace and retest the baseline. So your order can be sitting on the baseline, or you can scale full length of this candle down to where your stop would be, maybe right over here, or even over here. I usually go like this. I go pretty crazy because sometimes baselines fail, and this can definitely save you a whole bunch of headaches. The downside to this is that you're not getting that fat, juicy position filled in, and so as a result, low risk, low reward. However, I would take low risk, low reward every day for 365 days, and not really worry about random gambles or crazy trades that don't make any sense for whatever reason. You know, so basically, let's jump back into it. You have a reclaim, a couple of full candles above. You assume that a retest at the baseline would be there. You are eyeballing your stop losses or an average, averaging out of the position, assuming that your average would be here and you can exit in a break even. So you have to allow some space in your leverage. Can't go crazy to do this. Or if you don't want to average out, you have to get in and you have to put a stop and you have to accept the consequences if it doesn't work. But on the ATR value, you're getting in over here, and when the diamond prints, that means price has moved one ATR value away from the baseline. Not away from the candle, not away from it, but one away from the baseline. And it is not an ideal place to go long now after the bounce, because you're giving up one ATR value away from the ideal entry. You're giving one ATR of profits, which imagine if you entered here and price moved up by 1.5%. That's a $400 move, and that could be quite substantial in terms of how much you can earn on that. And that one candle capture is very easy to perform every other day or daily, depending if you have the time for it. And you're taking the majority of profits here on this one little candle near the resistance, and then you ride the rest, adding to your position using other strategies that we have formulated and explained. So your checkpoint goes to retest the baseline or the dragon skin again, and you're scaling in here, adding to this original position the 10% that is running. So you took profit here, 10% is still running, it starts to lose value, you reaccumulate, okay, assuming that it will bounce. It bounces, maybe take profit, or depending, right? You manage it actively. You hold it, you manage to add to the position, boom, you get rewarded. It's a nice setup. But what's important here is that if you want to add to the position, please pay attention to the diamonds. When one disappears over here, when the candle falls, so checkpoint, okay, baseline support, equilibrium zone, okay, dragon skin, first instance, first flag, okay, momentum is going up, okay, max 7 setup, kind of max 7ish, not really, but it was right here. retest, and you're like, okay, no diamond on this candle. That means you're within the ideal spot to go long. So maybe you go single limit right here, instant profit, right? Diamond disappear over here, risk increases because this is the second time that we have resistance here and we have failed. It's up to you how you manage this, but it's telling you that if you want to go long or short, this would be the place. If you're going short over here for whatever reason, your stop has to be here. If you're going long, your stop is looking to be, well, it's not looking to be anywhere, because what happens here is that you assume the price will continue running. If you put a stop here, you might, it didn't touch it, but it could have taken you out of your position easily. So it's up to you how you manage it. Structurally, remember, this is also, we had our MarketSpy DSR showing us signs of life over here. So you're like, okay, there's support here, maximum support here. Like it's not going to run through it. If it gets rejected, it's probably going to bounce away from here. So I'm going to average out. Instead of putting a stop loss, I'm just going to buy this whole area, wait for a bounce, exit, because I already know that if it goes lower, I'm not holding it. I'm exiting it as soon as it reverses. But that didn't happen. You averaged in, you followed the rules, you got rewarded with this one little candle here. Little. Not so little. And then, yeah, this is your basic ATR value interpretation and most ideal places to go long. These things take time to develop on a 1 hour time frame, so you have plenty of time to pull the trigger and decide if this is the right place to do it or not. Now, here's a reclaim, a retest, bounce, right? And if you're going short over here, you have to put a stop loss at the peak over here or over here. If it takes you out, now there are no diamonds here, so any one of these places is a good place to go long or short, depending on your analysis. Now there are no diamonds here, but I think just because we already produced this pocket of bearishness, and this, I think this is just traders taking it in hopes. This is hope mode. I think profit taking had occurred here, and if it pumps, I think it's going to fade pretty quickly. But we'll see. We have a new, everyone's expecting that new candle open on the monthly a day and 5 hours from now. So pretty significant level, and it's better to just wait it out and see what happens. Either way, we tend to get these pullbacks anyways, but the equilibrium zones are fanning out here. So not only am I looking to short and hedge higher, but I'm also looking to buy starting from here. So on the daily open tomorrow, if that happens, I'll be buying this. I'll be buying this. We have relative support over here, weekly ATR. We have a developing CPR over here. We have a daily. So lots of reasons for it to pull back and then resume. Looks good. The fanning out hasn't happened anywhere prior to this consolidation. This is the first time on a 1 hour where we have this alignment of equilibriums, and so if they fan out and expand further, we can expect price to keep rising. Definitely. Which means any pullback here is a buy, and anything substantially higher than this previous peak, like I would say over here, is a short. For intraday players, for momentum players. Because remember, momentum can and will probably die along the way. There's only so much interest that Bitcoin can pull right now from traders. So we'll see how that goes. Pretty cool. Bobby B will do a boot camp on this for sure. These are great questions, but I think we need to deep dive individually inside a platoon or the pit inside of the Discord. Just go into it. Now, these flags, like for example, like look at this. Run over here, right? It's not always as clear cut as this example here. It's easy to look here. Let's be fair and look at something like this. Look at that first instance. Okay, the majority of them, yeah, but sometimes you get something like this, and usually get used to it. If we don't have a continuation after the range bound, then it's fair to say that price is telling you that, yeah, I don't want to go higher. And you have a whole bunch of bearish signals over here below baseline. There's yellow X here, yellow X here, yellow X here, and it's looking like equilibriums are conflicting over here. We have a lot of red here and very little to no momentum. What that means is that you have no strong, powerful blue waves. The momentum is dying. Price is kind of going sideways or up. So that's diverging, dropped. And you're looking to short the pause areas, which is the squares are the opposite of the flags. So if you flip your chart like this, every time you have a pause area where price has the potential to reverse, it's probably going to reverse into the baseline. So here's a reclaim, here's a retest, here's the take profit area, reclaim again, retest, breakout, actually a punch out setup over here. And you're looking to, when you see these, this means price is going to aggressively push back down, and you're looking to reaccumulate over here. And it's the opposite of the yellow flags. Flip your chart and it will be the same setup. USDT is going to, I do have one account with USDT, and there are a couple of bugs, so be careful. BTC USDT is fine, but there's so many new. We have just added the rest of the instruments, so there's going to be a new update rolling out soon once the testing is complete, and it's going to have all the other coins that were missing in there. So let me see if I can find this. Is going to be BNB USDT, Sol USDT, Better Call Sol, Matic, Pragmatic, Erratic USDT, Filecoin, Filecoin USDT, EOS, and ETC USDT chart settings have been updated in the next version that is going to come out soon. But yeah, Bybit is where it's at. It's moving in the right direction. I like it. Dealing with stops. Yeah, sometimes you have a reclaim like this. If it's too good to be true, it probably is. I skip anything that looks exceedingly violent. So, for example, we have this and we have a reclaim, and the retest is, I don't know, it just kind of looks, it looks different. You know, you have, this was crazy. Like I can't explain it, but if you were to go long here, and you're like, okay, if I'm long here, my stop is here, you still saved yourself from all the trouble. Yeah, you lost a little bit, sucks, but it went down, reclaim, same print. Just because you got wrecked over here, not wrecked, but you preserved your capital by not giving up as many losses as you could have otherwise if you didn't manage it well, if you didn't put your stop loss. But if you did so, I guarantee you that 2 or 3 stop losses are not going to deter you from continuously making profit. If you have a reclaim, retest again, we notice the diamonds over here disappear, so you can go long over here. You can go long over here. Why are you going long? Because you're in the green. Okay, if there were no diamonds and it went down and it went short, you would be going short. But the same principle. So you got long over here, instantly rewarded. I think this kind of pump would erase any losses that you may have gotten yourself into over here. What about this? This goes down, reclaim, short. The reason it's important to exit on ATR values is because each one of these candles, we can measure ATR by eye, looking at an average candle from here to here, $500. If you treated this as a reclaim and the baseline retest, let's flip it upside down. Bam. So reclaim, retest, no diamond. Momentum is kind of dying, supporting the thesis that this is likely to go lower. You go short right at the baseline. It falls by double the ATR, even more, almost triple. There's first sign of resistance that's in the way, which is this purple line. It's just kind of a big deal. Okay, that's why it's so vivid on this on our indicator. And so yeah, you have to take profit, and you cannot imagine at any point in time holding from here to here and have these numbers and you're like, yeah, I'm gonna make 15% if I hold it longer. What if it's consistent, systematic sort of trade? Go up, retest, go short, take profit on the ATR value, 90%. Now you can let the 10% ride with a stop at entry or above. If it takes you out, great. But if it continues falling, that 10% that you still have as part of your trade is going to greatly improve your winning ratio overall. Here's a reclaim, no retest whatsoever. Hard to chase it, unpredictable, diamonds all over the place, no space to enter. So this reclaim was kind of, price just started falling, right? So your only option is, remember that this is a flag in the opposite direction, this square. When it shows up, it will press against equilibrium zone 1, 2, and 3. And so you're taking a ladder from here all the way down to here, or you're putting your entry at the baseline retest where price falls, and you claim this as your profitable trade. Now these candles here, average would have been, you can backtest this, you can go back and backtest, so about $300. So if you can go short, let's say on a punch out, red happens, you can capture 300, 800. Look at this, one candle is 800. That is 3 times the ATR value of an average of this range. So technically you're taking good profits, and you're doing this professionally without ridiculous expectations or looking at a dynamic or some sort of support over here and you're like, I'm gonna hold it till this level. No, you get in here, you exit here, that's your trade. You have captured a profitable, successful trade. What happens then is none of our business, and we should wait until we have a setup and play it accordingly. Now, here's another advice. You start flipping between 4 hours, 5 hours, 6 hours, 1 hour, 7 minutes, 5 minutes, 15 minutes. You're going to get a little confused because all of them will show you different things. But you have to understand that 4 hour needs to catch up to a 1 hour. So once you have a reclaim, let's take a look. So let's say you have a, it's showing you green, cracking at a green sign, okay? Reclaim over here, and it's going for a retest, and you're waiting for that retest, and you might want to go long on this reclaim. It's risky, but sometimes you get instantly rewarded with a nice fat candle, $300, $500. But to wait for this retest, you had to wait for the reclaim, for the candle close, and you had to monitor this for 7 hours. 7 bars, 6 bars later, you're like, yeah, I'm getting in. So signal comes in, pyramid fires off, your alerts go off, and you're like, yes. But now you have to wait and plan your setup on that signal. That's why I say you never act on a signal right then. You plan around it. When it fires off, you're looking at why it's happening there? Why is it happening there? So, okay, now let's go to the 4-hour chart. We marked it on 1 hour. We know what's going on 1 hour. Let's go to 4 hours and see what's happening there. On 4 hours, it would not give you a profitable signal because it's still below the baseline, and that might tell you that, okay, on 1 hour we have a reclaim, but the 4 hour is still below the baseline. What if it gets rejected? And it does. It goes down and it gets rejected, and seemingly there's nothing to support that this candle. But this wick over here, let's mark this candle right here and go back to a 1 hour chart. This wick that went down was a baseline reclaim and then a retest. There it is. It closed above the baseline, which means if you're strictly working with 1 hour, you're better off profiting from the moves that happen on 1 hour, because if you look at 4 hours, you're going to have to wait for this to happen, and then your trigger signal to go along would be a retest of the baseline, which may not happen because these things take forever. Now multiply these candles from here to here and you get 6 bars, which is 20 hours of 1 day, which is why sometimes I disappear and you don't hear from me for days on end, because I'm just waiting for this thing to do its thing so I can get in and cast a ladder. And the more you study the charts with MarketSpy, the more clear visioned you become, and you understand that higher timeframes tend to be more stable, but they're by no means the most ideal timeframes to execute a trade, because they need to catch up or they will persist pushing the price down, and the lower timeframes such as 1 hour that you thought had a setup, that setup might fail. The good news is that if you place a stop loss from your entry here to here, you're at a risk of going down by $1,000. So $1,000 distance from your entry to your stop loss, which is brutal. However, on 1 hour, if you go and get in over here on the retest, your stop loss is only $200 maximum, even $800 at the capitulation wick over here, which is marked by the volume also. So you have to take that into the account. So you have a tighter stop loss and faster results. But if you switch, like there are traders out there who say, know your environment, right? Analyze your environment. Analyze your environment. The environment is very important. Multi-time frame scanning, multi-time, go to every time frame, go to every time frame. See, when that happens is you get confused. So choose a time frame that you're comfortable with. I feel like 1 hour is like a very human time frame, because you're looking at your doctor's appointment, driving to work, going to the beach or whatever, and it's always like 1 hour, 1 hour, 1 hour, 1 hour, right? It's just gonna add up with either like round number. And 1 hour is just perfect. Nobody thinks in like 15 minutes. What am I gonna do in 15 minutes? You're like, I've got about an hour. Nobody thinks in 4 hours. Like, hell, am I gonna 4 hours? Like you can go and shoot a movie and become a superstar in 4 hours. I don't know, or something. But in 1 hour, you're always scheduling your day. You're like, I've got 12 hours in a day, 24 hours, you know, half of it is sleeping or whatever, resting, but the other half is work. And so you can plan your trade using an hourly time frame if you're a beginner and you're starting with that. Don't overcomplicate things and scan all your time frame. We can do this during live streams where we're looking at a potential speculative sort of understanding of where Bitcoin price might end up, given that. So like triggers on lower time frames right now will lead to this big time frame catching up. Once it prints a dot here, lower time frames are going to give us trade setups up. Okay, so hopefully these are great examples to understand the relationship. There's no time frame that performs better. It's just that your risk varies by time frame, and your execution and the time needed to get that trade in and out is different. Higher time frames, you're trading small. Lower time frames, you're spending more time, but you're risking more. You're trading bigger, more actively, and in both ways, in both instances, you will be successful with MarketSpy if you follow these simple, basic principles about understanding the delay in markets and how traders get ahead of themselves a little too early all the time, or they get in too late when it's time to be early. So just meditate on your charts, take your time, and don't freaking trade if you don't see anything. There's a reminder here. Inside MarketSpy settings, go to style. Check it out. All right, so don't force it if it ain't there. I think that's the golden rule there. The less you trade, the more you make. Believe it or not, it's like the opposite of everything in trading. It's the opposite of everything that you know about in life. It is possible, but there's a clever way to implement it, and it has been done privately. Not it hasn't been released to public, but there's a way to do this. It's just that your system has to be 2 steps ahead of the market or whatever it sees. Like most systems available to retail that are coded in the backyard they fire off a signal, the bot instantly executes it, and that's just not right. It has to fire a signal, the bot has to wait for a confirmation. MEXC is it relies on a number of things to happen at the same time, and the bot must be able to. So I don't think anyone would be able to code it just as is, because you still have to see certain things that the bot doesn't. But what can be done is, I think, an assisted automated trading that complements MarketSpy would be better. Whereas, for example, if it notices a pattern, it will tell you execute a trade, and you just have to click yes or no. Instead of doing it yourself, it will calculate everything itself. It will say, okay, no more than 1% of your risk. Is it possible with a stop loss at the previous wick from 20 periods ago? On average, you can calculate where the wick is and then throw a stop loss in there randomly if necessary. And I think it's going to survive and pretty much outperform most other trading systems out there if semi-automated with your discretionary input as a guiding point. Hand in hand, a system like that, yeah, that would be absolutely amazing. But in terms of leaving it on at night, no one really does that. Even quantum algorithms and firms, quant traders, they have to be there to see and give the green light for the bot to execute. There's no magic pill that will just do it for you, because bots are dumb. Simple as that. They don't discern. They don't know if it's the top, if it's the bottom. We as traders, we can kind of feel it. Like, look at this thing, right? I have been personally screaming top from here, and I was ridiculed. We're exactly where I was screaming on top of my lungs. But this did make me feel like an idiot, because I was like proven wrong once, twice, and it's like I don't know anymore. I'm pretty sure it's the top, I just don't know when. And then bazam! Elon Musk comes along, and now we're thinking down, which is why I think up. Pretty simple. Until it finds that support, that resistance, wherever that may be. I think this is the median right here. From this peak down to here, we have reached the equilibrium. So traded against it, I think we're going to bounce away from it. Very exciting times ahead of Bitcoin. Lots of mindfuckery on the horizon, and that's a mental stimulation. It's always fun to be challenged by the unknown. All right, we'll see how that goes. Yeah, we'll think about that. Approve, decline is like good to go. And if yes, then why not?
CR,
Who is it?
Tonto here.
What are you doing? What do you want, Tonto? We're chilling. What are you doing?
Nothing, CR. I just thought that idea is brilliant. If you need assistance, let me know.
Right. Yeah, you're doing a great job. Go back to Discord. We'll consult you if necessary when the time is right. All right? Good?
Thank you, CR. Enjoy the rest of your stream.
A good reminder, Tonto, about the stream. Maybe it's time to end it because we've been at it like maniacs for how long now? A couple of hours at least. The playlist just won't let go. It's the only reason I'm still here. The playlist. He's a major ass kisser. Tonto's only pretending to be polite, but in Discord, even I get screwed. He knows that this is our show. He has no place here. Last time he took us to the pits of hell, to his office. It was embarrassing. But yeah, Tonto's kind of a dick. He can be. He is. Trying to protect this guy. He is. I envision a future where we have choose your strategy and you say Jackrabbit activated, Jackrabbit initiating, and then it scans, finds a Jackrabbit, found a Jackrabbit, execute, you say yes, it does the stop loss and everything, trade complete, you have won $30. Yes, let's repeat it. No, wait a minute. Jackrabbit's over. It's a checkpoint now. Let's go Dragon Skin. It's a punch out looking like. Scale, confirm. Scaling position, risk amount, less than 1%. But it's gonna take a while, my friends. You tell your friends about these streams, and I'll make it fast. We don't have to fantasize. We have to realize, not analyze, right? And we're gonna do it. Everything takes time. But I don't know, we start with like something like a mobile app that kind of gives you like a all criteria met, yes or no. You execute yourself, because you can't blame a bot and say he executed that, I didn't want it, Google Assist did it. No. It can kind of give you like the red light, the green light, and you say, yeah, okay, sure, let's go with it. I will take the responsibility of this trade. Because if the bot starts executing, that's a liability. People can come and sue and be like, you know what? Get really angry.
Lost all my money because of MarketSpy, a stupid fucking automated bot system. Traded without my permission.
Yeah, I invested in MarketCypher, lost money, then I invested in this stupid bot and I lost money again. I'm gonna sue you guys.
You know, we could have problems. So we need something that is, we as traders, we need to be big boys and girls, ladies and gentlemen, and take responsibility and destiny in our own hands and say, you know what? I'm responsible. I'm doing this. Shut up, Tonto. Just tell me if it's a great setup. 5 conditions. Is it a max 7? It is? All right, here you go. Here's your fat little button. Smash that. Well, ladies and gentlemen, it's been a pleasure. I think it's fair to say that none of us know what Bitcoin is going to do next, but we can sort of, kind of, maybe understand its price behavior and what it's trying to tell us. And we have dissected that, ninja chopped it to death today. And I think we understand that first is going to be a pump, then a corrective dump, then a reaccumulation, then a pump again, because we had our first breakout today above those green steps. And what that means for us is that this is the first time since the 40K pump, which means we're probably most likely going to retest that peak, the El Salvadorian glorious peak, the El Pico. We're going for it. And there's nothing in the way to stop it. You know how Bitcoin does. Every time there's a China FUD, what happens next? Last time I remember, the China FUD happened around 3K. Next thing you know, it was 10. Then there was a correction, and it was 14. I think the same thing, people have forgotten that China FUD is the fuel, the cherry on top to a bullish correction. Would I like to see Bitcoin go lower? Of course. Do I need it to do so now? I can wait. Don't need it to do it now. Are we going to see 40K? Hell yeah. Tomorrow? No. In 5 days and 5 hours. Look at the chart. But until that happens, look, the fanning out of the equilibriums on 1 hour, that's my accumulation range, okay? I want to be a part of that, and I want to also, how do I say it? I kind of, it's one of those weird moods when you want to be short and long, and you know both are going to work out. We have a choice. We have a correction coming, but there's more upside at the same time, because I think 30K held. It held well. New monthly candle open in 1 day and 7 hours. So I'm begging you, wait a little bit. Will you miss a massive 3K move? Probably. Will it be worth it waiting and then confirming a directional trade where the candle opens and closes God knows when at the end of the next month? The whole July through. We're going to see Bitcoin moving unidirectionally. Will you be there to take that trade? Do we have the wicks? Have we forgotten about bulls and their defense mechanism, and that they're also interested in levels? And 30K looks like they're married to it for now. Do we have reports of whales and shorters closing their positions and opening them at the same time, and all that kind of nonsense going on? Do we have Bobby Lee coming through with a 100K target by September? Yes, we do. And even though it's easy to get wrecked trading against the trend, I think it's time to correct. It's time to find that trend line to hit against, that we can call the second lower high, because we haven't had a lower high. Is this the moment that Bitcoin starts to print that lower high? I think so. There has to be a lower high. There has to be a triangle so that Crypto, Moon Carl, and all the methodologists of triangles can finally do the video. The if video. If it goes up, then X, Y, and Z. If it goes down, then A, B, and C. And of course, we have to thank our sponsor for today's video, Mr. Rastani, Alessio, who's all over the place and doesn't know whether it's a bear market or a top. What's my entry, bro? What is my entry? Can you tell me? Inside of your premium community? No. Neither can I. Platoon doesn't know. I don't know. There is no entry. But I'm certainly not counting waves and guessing, was this the bottom or not? I'm telling you, we have a reclaim and we have a breakout of the CPR levels today. All we need now is a little correction, a little needle down, pick it up, and we're off to the races. Last time when we were supposed to go to mid 40s, we could not. This time, Bitcoin is pissed. It's going to finish the job. The question is, are you going to be there to help it finish the job? Or are you going to be the job? If you're here with us at Cryptopocalypse now, you will not be the job. You will be the man or the woman handling the job and trading it directionally as prescribed. Elliott wave psychology. You guys drive? Who drives? Everybody drives. You drive your car. Do you drive it in Elliott waves? My Elliott waves?
My Elliott waves.
Your Elliott waves.
Our Elliott waves. Do you eat your noodles in Elliott waves, depending on your mood, the sentiment? How about the weather forecast? What about the rain and the sunshine? Is it moving in Elliott waves? First it hails, then it suns, then it rains, then it snows. Do you plan your day in ABC? Go here, go there, and then finish there, capitulate, and then rebound and do it again on a Monday morning. In Asia, they do drive in Elliott waves. Prizes. We're going to be choosing, like I said, at the end of the month is to celebrate the candle open, that 1000K giveaway. We're going to do a live. I need to figure out a way. If you have any ideas, write it up in Discord, how to actually do the random, like if you know a tool that does, because I was going to do it manually, write it down on my little notepad, you know, take a little napkin and write it down, all the names. By the way, comments that just have their Bybit ID or something like, hi CR, here's my Bybit ID. I'm sorry. You reap what you sow. You know what I mean? But great comment. We have a number of comments. It's going to be super easy. And in the next giveaway that is going to follow right after that, we're going to take the prize and split it like ninjas. Like a clan of ninjas. Split the rice between 10 people. Everyone gets a bowl. So the giveaways in the previous stream, check out the previous stream. I think it was, it was the last stream before this stream. The Great Bitcoin No, I think it's in the title. It's actually in the title. It says $1,000 giveaway. plus other things, which I forgot what they were, but it had something to do with Bitcoin and price. But regardless, send me your greets. Say something nice. And then aim for the prize. Say something nice, aim for the prize. All right. Wow. Simply wow. We have 4 contracts. And there's lots of gains to be had. 2 cents. And remember, gang, 1% minimum is what you're aiming at with each and every trade. Don't be greedy. Let it go. There's always another candle just around the corner. 1% gang. Sykes. I don't know what to say. I don't read through all of them. But if you admit to unthinkable crime of the century, then you have the power to correct it and set an example. Don't stress it, guys. I'm just saying. Shouldn't be too hard. It's just that I go and look at all these other videos and I see people are just like singing praises like it was church on all these videos that don't make any sense. I tried my best, but I couldn't last. Couldn't last for 5 minutes. As soon as it started, I was like, stop! But they get those comments. And it always surprises me how we have such an amazing, powerful community of silent observers. Not really, but you get what I'm saying? I don't know, guys. I don't know. We got to step it up somehow. Step it up. All right. Viewers are dropping off. It's time to go. It's a signal. It's definitely an omen. It is, after all. This is how I lose hearing. It's 4 a.m. in the morning already. I miss those days. I'll be right back with you on Discord tomorrow. We're going to take a little break and do it inside the platoon. Inside the pit. Inside of the Discord. And great questions today from Bobby, Dale, Jean-Claude, Clifton. I think it's time for a boot camp. I think it's time for a personal one-on-one kind of the tear down of MarketSpy. And we have a lot of new people, and it's almost I assume that they have figured it out. They watched the boot camps. They're suited and booted, ready to kicking ass. That's why I'm not hearing anything from anybody. But maybe it's time to wake up the dragons and go to the boot camp.
Ladies and gentlemen, once again, thank you for being here. Enjoy your day wherever you are. Much love. Live from the platoon pad, your home, my home, right here on this wonderful evening, night. It's actually more like, yeah, it's 4 a.m. in the morning over here. You can tell just by looking at the skies. But I'll see you next time, and thank you for tuning in. Wonderful stream as always. Wouldn't be the same without you guys. Super chat. Excellent, awesome community. One love, and until next time. I'll see you at 40K and beyond.